turns to a 10-year Treasury auction. BioNTech and Pfizer could produce 3 billion vaccine doses next year as countries race to reopen. We bring you our conversation with BioNTech's CEO. And hackers breach a Silicon Valley startup, giving them access to 150,000 surveillance cameras, some belonging to the likes of Tesla. Good morning, everybody. Welcome back to the second hour of the European Market Open. Futures pointing tentatively in many cases to the downside, although a little bit more decidedly in the case of the London market. FTSE 100 futures down by 0.7%. The big picture story really has been around tech or no tech, the stunning Nasdaq rebound that we saw in yesterday's session, up by more than 3%, Tesla up by 20% or so. All of that very much at the forefront of the market's thinking. It's sometimes difficult to play those tech themes into Europe. We certainly watch what's going on in the German market, and we watch how the value plays, of course, and the value stocks do as the other side of perhaps that tech out of tech rotation. So European equity markets opening this Wednesday morning, 8 o'clock, to the downside, down by 0.4% on the FTSE 100, not appearing on the left-hand side of that screen, but it is to the downside, I can tell you. Down 0.5% on the FTSE right now. The CAC 40 down by 0.2%. The IBEX down by 0.3%. So let's get back to that top story around those wild swings in markets. US futures are softer this morning after the Nasdaq surged 4% in the biggest advance since November. Shares in Tesla and Peloton surged to double-digit gains. Double Line's Jeffrey Gundlach was skeptical, calling the Nasdaq, quote, dicey. Joining us now with analysis, Carolina Moura Alves, Quintet Private Bank Group Head of Asset Allocation. Carolina, really nice to have you with me on the program this morning, and I wonder where you fall down on this rotation trade that seems to be so much the story of 2021. Do you think the rotation still has legs, the rotation away from tech, despite what we saw yesterday?
Hello, Anna. It's a pleasure to be here. Good morning. The short answer is yes. There is still momentum on the rotation, and we should expect it to continue. But we do think it will ultimately be short-lived, and the longer-term trends will assert themselves. And so actually, we at Quintet, structurally, we like tech.
You like tech, so that's interesting, because I wonder if we're in danger of being too binary about these things. When I ask these questions, I ask, do you like tech or do you not like tech? Do you believe in the rotation out of tech into cyclicals, into value? And I wonder if the end result might be somewhere in between, Carolina. How do you look at that sort of continuum of outcomes from here?
Yes, I think you're spot on, actually, in what you're saying. My answer was binary, as you rightly point out, and markets are very seldom binary. So the way we like to position our portfolios as a result is to not be too exposed to one or the other call. Timing these rotations is notoriously difficult to do in the short term, and rather think around how can you build a portfolio such that you have some exposure to what you believe in, but still allow for the possibility that other currents might assert themselves in the market. And so an example I would give is that we are actually overweight US equities, which has a clear overweight to tech, but also has exposure to other interesting sectors.
Yeah, that's interesting. So are you not put off by valuations in the tech sector then, Carolina? Because for some, that would be the reason that they'd say stay away from US right now and look elsewhere.
The short answer is no, we are not. We, of course, acknowledge valuations are very high, but we like to look at them in the context of very low interest rates as well. And that goes a long way towards, in my view, explaining why these valuations can actually be sustained. And then if you combined with that a very positive outlook for growth in the US, we saw the OECD numbers yesterday, we subscribe to that dynamic. We see positive earnings growth coming through, and we think that ultimately will be positive for US equities as a whole.
We've also heard from Jeffrey Gundlach of Double Line Capital talking about how he thinks that the Nasdaq looks a little bit tricky at the moment. Given what you said then about technology, I mean, he was suggesting that maybe we'll see some kind of sell-off, a bit similar to the dot-com bust. I guess you're not anticipating that, Carolina.
No, we are not quite in that camp. And in our view, if we were to see a material correction in the Nasdaq, and I would say that the 10% correction is not material in our view, just putting it in the context of the historical volatility of the index. If we were to see a material correction, I think we would rather be inclined to add rather than to reduce our exposure.
A lot of people focus, of course, on what's going on the 10-year Treasury market at the moment, or indeed Treasuries in general, and they look at the steepness of the curve, and they look at inflation expectations, and they think about what all that does to stock markets. So where do you see Treasuries heading, Carolina, and the link between that and stocks?
Yes, absolutely. A very, very critical driver of stock markets currently, and actually I would go even further of market volatility overall. We think treasuries have an upward bias in terms of yields. We could see them going somewhere closer to 1 3/4 by year end. Our current forecast is rather around 1.5. So I think it's fair to describe it as a sideways move. And therefore, we are not particularly concerned about the impact of treasury yields in prospective stock market returns for the remainder of the year. Of course, if our forecast and if our assessment proves to be wrong, and in particular, if we were to see a further spike in treasury yields, I think we would have to assume that stock markets would not take it particularly well, at least in the short term.
Okay, Carolina, stay with us. Carolina Moura Alves, Quintet Private Bank Group, Head of Asset Allocation. Stay with us on the programme. Coming up here on the European Market Open, BioNTech and Pfizer may have capacity to make 3 billion doses of their vaccine next year. More from our interview with the German biotech firm CEO next. This is Bloomberg.
Of the world's trade travels by sea. At any given time, around 5,000 ships are on the ocean carrying containers. Without them, the global economy would collapse.
Many of those containers pass through here, Singapore, the world's second largest port. The industry accounts for 7% of the country's GDP.
But the industry is under pressure. The uneven recovery from the pandemic is creating a shortage of containers where they're needed most and driving bottlenecks at major ports. It sent freight prices soaring.
Since the beginning of COVID-19, these are levels of shipments that we've never seen before.
Chinese New Year marks a seasonal turn for freighters when rates are renegotiated for the next year. Companies must choose whether to swallow the financial hit or pass on the cost. It's a decision that could bring new headwinds for the global economic recovery.
Welcome back to the European Market Open, 8 minutes into Europe's session, and you can see that we are in the main to the downside on these European equity markets. Certainly the Stoxx Europe 600 down by 0.3%. US futures also negative, but really flat to negative. Let's get a look at what's moving these markets this morning. Bloomberg's Danny Berger is with us, and you've got a few stock specifics to start with then, Danny.
I certainly do. Look, there have been some interesting earnings reports today, but one of the best stocks to come out of it has been Just Eat Takeaway, upgrading their forecast for 2021 from last year, which of course is a feat considering economies are likely to reopen open, also beating on EBITDA. But one of the stocks to the downside, this doesn't have to do with earnings, more of a technical situation, ABN AMRO, it's getting kicked off the AEX index. That's the Amsterdam index. In its place, we're going to see BE Semiconductor and Signify. So without that passive money tracking the index, ABN AMRO down about 2.5%, while those other shares that are being added are rising in today's session. Finally, Rio Tinto down for another day. 4 days of declines for iron ore. Supply concerns coming out of Australia's main shipper. Demand concerns as pollution curbs are enacted in China. So that's really weighing on the metals and mining stocks today in Europe. Finally, a quick look at what's happening in the macro picture. Again, focusing on U.S. futures, the dollar, and the 10-year yield, because all eyes are on that auction today and CPI moves as well. Our inflation concern is going to be front and center. Well, we're seeing the NASDAQ moving unchanged so far this morning after the NASDAQ cash index spiked yesterday. And Anna, it was the best day for pure momentum in the U.S. since 2008 yesterday. Is that just a blip, or can we see those NASDAQ futures turn around and stage a second-day rally?
And yeah, it was all a bit much for some people because NASDAQ futures now almost entirely flat, Danny. But yeah, certainly spectacular moves in yesterday's market. Danny Berger with a look at what's moving here in Europe and some reflections on the US session that was. Now, governments around the world are scrambling to get as many citizens as possible vaccinated, with more than 319 million doses already administered globally. But there is a long way to go before we can return to normal. BioNTech CEO Ugur Sahin says he is working with Pfizer to ramp up supply and produce another 3 billion doses next year. He spoke with Matt Miller.
In principle, this could be possible, so we are evaluating that. But it also depends on the order book. Yeah. So the question is now with a number of additional vaccine companies coming into the market. Our key question is how much doses are required, yeah, and where is the need to deliver, and this is something that we are evaluating at the moment.
What about the possibility of forging new partnerships? I mean, I know you've already worked with a bunch of other smart companies. Do you think, are you in talks with others to produce the vaccine in higher quantities and in more places?
Yeah, we are. We have still some undisclosed negotiations ongoing, but we have managed to establish a network with 13 partners, yeah, partners producing for us raw materials like lipids, yeah, and partners who are helping us in producing drug product, and partners in helping us also for fill and finish, like Sanofi, Baxter, or Novartis. So this is a network, a production network, and of course this production network includes the BioNTech production sites, including the Marburg site, which will come in now in April, and as well as the production sites of Pfizer, and in Europe it's Tours.
That was the BioNTech CEO, Ugur Sahin, speaking with Bloomberg's Matt Miller. Let's focus back on Europe. The rollout of the vaccine clearly crucial in Europe, but we are also 1 day ahead of an ECB decision. The central bank stepped up the pace of its emergency bond buying last week. That's after policymakers issued repeated warnings about the recent rise in yields. Carolina Moura Alves, Quintet Private Bank Group Head of Asset Allocation, is still with us. Carolina, how much do you expect Christine Lagarde to address this head-on, this rise in yields that we've seen globally, and some of that spilt over into Europe?
We expect her to be very direct in how she addresses the topic and to lean against the rising bond yields. This is something the ECB will not be particularly comfortable with, not necessarily because of the rising yields per se, but because of the associated tightening in financial conditions, which is, of course, a source of concern for any central bank trying to manage monetary policy.
And indeed, and they don't like the strength in the euro sometimes. The euro is actually a little bit weaker than it was, though, 118.80. How much relief will that be providing?
Definitely. A weaker euro at the margin again loosens financial conditions, which is very much in line with what the ECB and currently the major central banks would like to see. So that will provide them some relief. Having said that, it really depends the context under which the euro might or might not appreciate. If it were in the context of a strong economic recovery in Europe or even an acceleration of economic growth relative to the US, for example, I think the ECB would be more relaxed about it. As it happens, currently it's really not a concern for them, I would say.
Is there room to step up the pace of the PEP buying, Carolina? Is that something that the ECB is going to want to do?
There is room. They could potentially front-load some of the bond purchases that they have currently in their plan. They have the flexibility, but I would think...
Okay, morning guys. It's time to place an order. If you're up to euro, if you want to trade euro, we're going to place order at 118.77. So if you want to follow this trade, here is your chance, 118.77. We're going to buy this pair. So you still have a chance. You can place your order and follow my trade. Okay? I'll speak to you later.
Excellent question, and very much linked to our own expectations of the vaccine rollout. At the start of the year, we thought that we would have synchronized growth, a synchronized recovery between the UK, the Eurozone, and the US, predicated on the notion that the vaccine rollout would occur roughly at the same pace across the three. Unfortunately, that has not been the case, and what that has meant is actually that it has introduced a lag in our expected recovery to the Eurozone GDP by 1 quarter vis-a-vis the US and the UK. So we still expect strong recovery, but unfortunately it will be in the second half of the year rather than in the second quarter as we have originally anticipated.
And we've been thinking...
Nice one. If you place an order, it should get executed and you should get filled at 118.77. Okay, well done. Good one.
What does this do for you, to the balance that you want to strike between US assets and those over in Asia?
Yeah. Very true. So at the margin, higher yields in US Treasuries make US Treasuries more attractive from an income perspective. But actually, we still think that you can find a lot of interesting value in Asian assets, and in particular in Asian high yield, where you see that not only yields are high compared to other asset classes, but credit spreads notably have not compressed as much as with other credits. So you can really talk about a notion of value, there being value in Asian high yield, while speaking of value in US Treasuries is a much harder case to make, especially in the environment we are in.
Carolina, thank you so much for your time this morning. Carolina Moura Alves, Quintet Private Bank Group Head of Asset Allocation. Carolina will be continuing her conversation with us on Bloomberg Radio at 9 a.m. UK time. Let's get a Bloomberg Business Flash then. The top corporate stories we're covering here at Bloomberg this morning. Here's Laura Wright.
Thanks, Anna. Bloomberg sources say Greensill Capital's plan to sell parts of its business to Apollo-backed Athene Holdings has been derailed. That's after banks, including JP Morgan, extended a lifeline to a key technology partner of the collapsed lender. We're told the deal is now unlikely. Losing the tech supplier makes Greensill a less attractive target. Citigroup is punishing investment firms that kept payments it accidentally sent to Revlon's lenders, blocking them from certain new debt offerings. Bloomberg sources say it's choosing not to invite the money managers, including Brigade, HPS and Symphony. Citi is still on the hook for over $500 million of wayward cash. Disney's flagship streaming service now has over 100 million users just 16 months after its launch. Disney Plus is quickly establishing itself as the most formidable competitor to Netflix, which has just over double the number of subscribers. The success is promoting Disney to increase the programming budget, now targeting more than 100 new titles a year. Anna, can we assume that you perhaps are one of those new Disney Plus customers? That's the Bloomberg Business Flash.
You never know. Someone in my household, perhaps. Laura, thanks very much. Laura Wright here in London. Thank you. Coming up on the programme, hospitals, jails and car maker Tesla are among the victims of a massive surveillance hack, the latest breach to plague the cybersecurity world. We have the details next. This is Bloomberg.
Okay, guys. I also will going to place a stop on profit for one pair on euro. We purchased, as you remember, at 118.60.6. I'm going to place stop on profit at 118.65.6. I'll point out, so you probably will do the same. So if you remember, if you follow this trade with me, if you've been for a while, we placed in order to buy euro a couple of days ago, 118.60.6. So right now I want to, if it will move lower, I want to sell with profit. And later on, I probably will buy again, because we have order at 119.85 that's supposed to be hedged against losses. So somewhere on the middle between these prices, I'm going to sell with profit both positions. Sorry, not orders. So that's it. I placed a stop for my order, for my position at 118.60.06. I placed a stop on profit at 118.65.6. If you know what I'm doing, how I do it, you can get a strategy on our website, and this is our strategy we're using for years, so you can learn it, and you can start trading as well profitably other pairs, not only pairs you can see on the screen.
I think the relationship between Bitcoin prices and the tech market is very close. So watch that indicator. I think Bitcoin prices go down. I think the tech stocks are going to be hit very badly.
That was Mark Mobius there, of course. Welcome back to the European Market Open, 22 minutes into a European trading session that looks fairly mixed, actually, flat. And that's what we see in US futures as well. So the European stock market down by just 0.1%, really pausing after the excitement of yesterday. We saw such strong gains on the NASDAQ, that in the context of the heavy selling on Monday. Net, we didn't move all that far. But NASDAQ futures are also under pressure this morning, but only by 0.2%. Dow futures, though, now pointing to the upside. The direction of travel for those futures stateside has certainly been in an upward one over recent hours. Let's get a Bloomberg First Word News update. Here's Laura Wright.
Thanks, Anna. Russia is planning to slow access to Twitter. That's after announcing a lawsuit against it for not deleting posts about last month's protests over jailing of the opposition leader Alexei Navalny. Russia didn't specifically mention the demonstrations in the new order, saying the move is because the social network failed to remove content unsafe for teenagers. The airline sector says most governments are moving too slowly in setting out the roadmap for a return to air travel. Industry group IATA says Britain has detailed plans, but more countries need to act. It thinks by the end of the year, air travel will be at about half the level of 2019.
Tools is our strong competitor to travel, but they will not replace travel. For the business travel, it will come back, but probably 12 to 18 months later and after the personal motivation for air travel.
Congress is near to passing President Biden's $1.9 trillion coronavirus rescue plan. And Treasury Secretary Janet Yellen says her department is preparing to send out aid as quickly as possible. She feels the stimulus plan will avoid repeating a key mistake made after the global financial crisis: not enough help from the federal government. Global news 24 hours a day on air and at Bloomberg. Quick Take, powered by more than 2,700 journalists and analysts in more than 120 20 countries. This is Bloomberg. Anna.
Laura, thank you very much. Laura Wright here in London. A group of hackers say they have breached a massive trove of security camera data managed by Silicon Valley startup Verkada, gaining access to live feeds of surveillance cameras inside hospitals, jails, and car maker Tesla, among many others. Joining us now is Bloomberg cybersecurity reporter Jamie Tarabay. Jamie, good morning to you from London. So how did this happen? What do we know about the size and scope of this hack?
Well, I think one of the things that we absolutely know is that this group of hackers was able to find whatever they needed publicly available online on the internet to go into the system and access these live camera feeds, as well as the archive material for 150,000 surveillance cameras. They were able to do this because they found the username and password for an administrator account for the Verkada system to be able to get into the system itself. My colleague William Turton, who broke the story, was able to speak to some of the hackers, and they said that it was very, very simple to do. A lot of the stuff was publicly available, and they did this primarily to show the vulnerability of systems that purport to access these things, and really the infringement on your privacy is something that they wanted to highlight when they did this.
Okay. Yeah, so if one of our colleagues managed to speak to one of the hackers, then we know something about who is responsible. What is Verkada doing about this?
Verkada right now has said that it's disabled internal administrator accounts to prevent any unauthorized access. They're working to set up a support line to answer questions. They say they've notified law enforcement and are really sort of investigating the scale and the scope. But, the fallout for this company will be significant.
Thanks very much, Jamie. Good to speak to you. Thanks for bringing us the story. Bloomberg cybersecurity reporter Jamie Tarabay with the details of the hack, which continues to roll on and take different forms day.
Okay, guys, it's time to place new order to sell Japanese yen. I'm looking to sell at 108.833. If you want to sell short Japanese yen, 108.33, here is the price you can sell it for. So if you follow the trades, if you already hold positions, as you can see on our blue line, on our ticker, that we already hold positions on Japanese yen, we need to get more Japanese yen. So we have 3 contracts in this case, and I'm looking to sell Japanese yen. I'm looking to open another position. I'll speak to you later when it will be filled.
Not only just COVID, but it's COVID related, but it's also stress related to job. I think COVID probably just sort of was the nail in the coffin for a lot of us. Having the destruction room here is also a very healthy outlet. I do not encourage it as something that we do on a regular basis, but I do find that when people come in...
Okay, guys, today is the busy day. If you want to buy Bitcoin, here is your chance. I'm going to place an order to buy Bitcoin The price I'm looking to buy, 54,466. $4,466. So this is the price I'm looking to buy Bitcoin. So if you really want to buy it, this is the price to buy if you want to follow my trades and if you want to trade Bitcoin. Just want to remind all of you that we're not falling in love with any pairs or Bitcoins or something. We just love them because they make us money. This is all. As soon as they will get into profit, we just sell it. We don't hold them. So people who think that if they will purchase and they will hold it forever, you better use other channels to advise you to do this kind of thing. We do not advise you to do anything at all because we're traders. We trade. If you want to follow our trades, you're welcome to follow. If you want to get the strategy we use, you're welcome to use it. But we don't give any advice. Okay?
My colleague Danny Berger earlier on, she was looking at that. To the upside, Telecom is moving higher. Deutsche Telekom has been a gainer today, so Telecom up by 0.8%. Autos and parts also doing pretty well. So two reasons or two sectors that perhaps lift the German market a little this morning, and we're fairly flat on the DAX. Turning to the banking sector now, and the rising yield environment is a positive signal for lenders as it represents a pickup in growth and inflation. That's according to my next guest, who adds that it's premature, however, to discuss rising interest rates in the UK and the Eurozone. Joining us now is Joseph Dickerson, Jefferies International.
Okay, guys, so I got to cancel Japanese yen order because it moved, as you can see. Unfortunately, it moved to another direction and it's too far away from our order. So I'll better cancel it. So you have to cancel too. And let's wait for another chance to place an order and get filled.
Deflation signal globally. In terms of fundamentals, of course, it impacts the U.S. banks mostly in a direct way. But the fact that global growth is returning and you have higher growth prospects and reflationary prospects, that is positive for banks globally. And that's occurring at a time when their relative valuations are historically low relative to the markets in pretty much every geography.
Yeah, so do you look at this, do bank bosses look at this positively because of what it says about underlying economies, Joe? Because it says that we're seeing recovery in economies and therefore the curve can steepen, growth expectations are improving? Or do bank bosses look at this and say, this is good because it plays well for our business? You know, we can make more money through lending operations as a result of this?
Certainly in the UK and Europe, in terms of can they make more money on lending operations, you really need to see the short end rise, but they can certainly make more money on their reinvestment portfolios, excess deposits. In other words, the liquidity that they hold, they can invest at different points in the curve to the extent that they have mandates that allow them to do that. But the fact that it portends larger economic growth is generally taken positively by bank managements, and you can see why, for instance, the curves are moving. I mean, if you look at, our economist took his UK GDP forecast for 2022, recently upgraded that to 7.6%. And that is something, if you think about loan growth potentially being higher than that, these are very big numbers the banks haven't seen at any point since the GFC.
I'm placing a stop on profit for euro at 118.79. Okay, I'm going to place, and if you follow the trade, you have to place stop on profit at 118.79. Okay, we're already in profit, whatever, like I'm always saying, whatever happened, if the momentum will change and if the price change direction, we will not get lost. We will be in profit. Okay? By the way, for the time being, I'm going to cancel the order to sell my previous holdings at 118.60.6. I want to keep them, so I will cancel this order to sell, and I will hold only one order to sell euro that we just purchased a couple of minutes, 20 minutes ago. So it's already in profit. So the order placed to sell if the price will change its direction. I'll speak to you later, guys.
Let's focus in on the UK for a moment then, Joseph. When I look at what we've heard from the Bank of England recently, there's been an emphasis on slack in the economy, pointing to the weak spots in the economy, the jobs that are not there, that were, or the jobs that might go as a result of the furlough coming off later on this year. So where does that leave us in terms of expectations for interest rates and therefore the banking sector in the UK?
Well, I think if you look at the budget, I think it's hard to see scope for negative rates because there's quite a lot of stimulus in that budget. I also think on the furlough scheme that the furlough scheme is going to have to continue to be adapted and rolled on for some time, whether it's September.
I'm going to move even further my stop on profit for order at 118.77. I'm going to move to 118.82. Okay. I move even further.
Lower house prices, higher unemployment, and slightly lower economic growth in most instances, depending on the bank. So, in terms of the balance sheet risk of the banks, you know, it's pretty conservative versus the economy. So that brings us back to then, you know, where's the revenue going to come from? And that is going to be this year a tale of two halves. It's going to continue to come from mortgage activity and capital markets in the first half, and in the second half, as economies reopen and you have greater non-essential card spend growth, you should see a pickup in card lending, and that's a very powerful impact for banks such as Barclays or Lloyds, which are the two largest card names in the UK.
That's an interesting picture that you paint there, Joe. Just briefly then, negative interest rates. Are UK banks still preparing for that possibility, or is that now off the table?
Banks are still preparing for that possibility. They certainly didn't talk about it a lot at their Q4 earnings, but they certainly, you would expect them to be preparing for that in the event that it happens. It is being talked about you know, at the Bank of England. There are still quite a few doves out there at the Bank of England, so it is something that the banks have to prepare for, and it is something that most banks in the UK have a European operation where they have dealt with negative rates already, so there is an institutional knowledge of how to deal with negative rates, which if you compare that to banks in Asia where they haven't seen even zero rates, or you know, US regionals where you haven't seen zero rates, they're still digesting that both from a revenue standpoint and a processes standpoint.
Some cross-border learning going on then, Joe. Thanks very much for joining us. Yes. Good to speak to you, Joe Dickerson, Jefferies International Managing Director. Coming up on the programme, how should we value green stocks? We put that question to Morgan Stanley's Jessica Alsford. She joins us next. This is Bloomberg.
women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
We're in the beginning of 2021. What are your biggest worries?
The inequality of the current world environment. It's troubling, and I think it's actually getting worse, which is a big challenge.
Welcome back to the European Market Open. 41 minutes into a European trading session that is entirely unchanged. Yesterday was perhaps busy enough for everybody. Nasdaq futures now points just slightly to the downside, not by much. Dow futures a touch higher this hour. Let's get a Bloomberg Business Flash. Here's Laura Wright.
Thanks, Anna. A group of hackers say they've breached a trove of security camera data collected by startup Verkada, gaining access to live feeds of 100,000 surveillance cameras. That includes footage inside hospitals, companies, police departments, prisons, and even schools, as well as car maker Tesla. Verkada says the internal and external security are working on the issue, and it's notified law enforcement. Grab is looking at going public in the US through a merger with a blank check company. Bloomberg sources say the Southeast Asian ride-hailing and delivery giant is speaking with JP Morgan and Morgan Stanley to identify a possible SPAC for the deal. We're told a traditional IPO is not entirely off the table, no official comment yet. Two of the world's largest sovereign wealth funds are warning investors to expect much lower returns in the future. In part, that's because the typical 60-40 balance of stocks and bonds doesn't work well in the current rate environment. Singapore's GIC and Australia's Future Fund say the days of bonds acting as a buffer against equity market risks are over. Bloomberg sources say Greensill Capital's plan to sell parts of its business to Apollo-backed Athene Holdings has been derailed. That's after banks, including JP Morgan, extended a lifeline to a key technology partner of the collapsed lender. We're told the deal is now unlikely. Losing the tech supplier makes Greensill a less attractive target. Citigroup is punishing investment firms that kept...
Okay, traders. As you can see, we opened position on Bitcoin just right here. So let's follow these. I can't even call it pair. Yeah, let's call it the. It's still Bitcoin. People trade, so people like it. So, but this is not pair. Actually it's pair. It's compared to Bitcoin versus dollar. Yes. So you can say let's follow this pair, Bitcoin versus United States dollar, and let's see how much Bitcoin will make us profit. Just to remind you, we trade, we measure our profit when we trade Bitcoin not in pips, in percentage-wise. So 0.1%, 0.2, 0.3, and so on. So position opened, and let's follow this trade.
head of global sustainability research. And Jess, I imagine this is something you give quite a lot of thought to, the size of the investable green market, what exactly is a green investment and what is not. And I imagine it depends very much on the mandate of the investor involved. What's your latest thinking on that?
That's right, Anna. It really does depend on how you want to define it. I think the easiest way to really try to get to the bottom of it is, are you thinking about the products that company is selling, or are you thinking about how that company is managing its operations? And what we've really seen for the first bucket is a huge emphasis on those green technologies. So technologies like renewable energy, electric vehicles, biofuels, hydrogen. On the other side, though, there's a huge amount of emphasis on companies reporting and disclosing their scope 1, 2, and 3 emissions. So not just those emissions that they're directly responsible for, but also the greenhouse gas emissions throughout their supply chain. And the SFDR regulation that you mentioned just now is really a step forward to try and get more uniformity of this disclosure from corporates and also from the asset management industry as well.
That's interesting. And so, Jess, will these new regulations, will it make it easier for us to establish the value of assets in the utility space, materials, industrials? Will really getting visibility of that scope 1, 2, and 3 help to value these things better?
I think the valuation really comes down to what is the outlook for the growth and the returns of a business, as with any investment analysis. And so I think really when you're coming to look at how to value green stocks, it's about thinking about the future demand. So how much renewable build-out do we need in order to get to a net zero economy? And conversely, what will the impact therefore be on fossil fuels? And so these are the types of questions that we on the sell side research, but also investors, are really trying to get to the bottom of. And what really is driving the share prices in many of those sectors.
And Jess, you say in your notes that one of the common questions you get from investors recently is, are we in a green bubble? What's your assessment of that?
It's over the last year, we've seen a phenomenal re-rating of green companies, as I guess we put them in a bucket. And it's actually quite a diverse group. You've got everything from EVs, battery manufacturers, you've got industrials companies, chemical companies, but all what they have in common is they are providing green solutions. And for that bucket of stock to the end of January, we're seeing sort of an average re-rating over the last 12 months of around 22, 24 PE multiple points. If you look at the non-green sector peers, that re-rating was more sort of 2 to 4 times on average. And so clearly there was that big re-rating. Now, some of it we think is absolutely about the change in regulation. You had the EU Green Deal, you had US policy looking more supportive of climate. You've had China announcing their net zero emissions targets. And this all helped to really boost the growth outlook for a lot of those technologies. The question is always, and when does a valuation become too expensive and too much growth is baked in? What we have seen, though, over the last few weeks is actually a real pullback in some of those green areas. And I think that's partly just due to a broader market rotation away from growth and into more value type companies. And I think also there is more of a debate now as well about just how sustainable some of the returns are. There's the growth, but there's more and more companies really trying to get exposure to green growth, and are returns going to be sustainable in that type of environment?
So in some senses, you can see that certainly the investment community is taking this investment theme very seriously, Jess. I wonder if money managers are voting in a way that reflects that seriousness. I'm drawn to a story by one of my colleagues that says that most money managers, there's been some research done that he cites, most money managers still fail to back climate resolutions. And it looks at some research that looks at voter, the way that shareholders and money managers as shareholders vote at certain board meetings. And in many cases, these This research finds that they don't back these ESG resolutions. Is that just because we don't have the right ESG resolutions broadly, or is it that there's a lack of seriousness when it comes to actually voting around this stuff?
I think as with everything, there's a number of reasons for these trends. I would say that I think where the climate transition story and the green story has really gained momentum is because it is sustainability funds that have got behind it, but it's also been mainstream investors as well, really seeing how this is a mega trend that's playing out in the markets. I think on the voting side, certainly we're seeing more and more investors wanting to use their position to be able to engage with companies and help them with the transition. Voting is clearly one way that can materialize, but we also know that there's a lot of engagement going on behind the scenes as well to really help push companies towards decarbonizing and contributing to reaching this net zero emissions target.
Jess, thanks very much for your time. Good to speak to you. Jess Alsford, Morgan Stanley Head of Global Sustainability Research. Coming up on the programme, is trader central bank divergence perilous? We will consider that question, put it to Laura Cooper, Bloomberg's Markets Live macro strategist. That's next. This is Bloomberg.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Welcome back to the European Market Open. 53 minutes into a session that's not moving all that far at the net level. You can see some divergence, basic resources weighing on the FTSE 100, that market to the downside. Elsewhere, gains for, in particular, the CAC 40 in Paris. Joining us now for more on the markets, Laura Cooper, Bloomberg Markets Live macro strategist. And I want to get to the question of the day then, Laura, because we haven't thought about this much in the last hour or so. The question is trader central bank divergence perilous? And I suppose this sets up everything we've been talking about around yields on treasuries and inflation expectations. Are we asking here whether traders see inflation and rates on the rise, central banks don't see things that way? Are we setting up that kind of different viewpoints and asking then where that leaves markets? What kind of thoughts do you have on this question?
Well, I think certainly that tug of war that we're seeing between central banks and traders, anticipating that they're going to have to tighten policies sooner than kind of current guidance suggests, is really the key thing for the key market conundrum right now. So markets are anticipating that we could see a strong bout of sustained price pressures, where really central banks are dismissive of that for now. So we had the RBA overnight just stand their ground, really, saying that they're not going to raise rates until at least 2024, and that contrasts with markets anticipating at least one rate hike over the coming 2 years. Now we have the Bank of Canada later today, a very similar story, and as we know in the Fed wants to keep rates unchanged for some time, yet markets are potentially forcing them at some point to capitulate, so long as we do see these yields continue to climb, so long as we do see markets continue to price in these rate hikes. And it remains to be seen, really. It's just this wild card of inflation. And CPI forecasts don't show that yet.
Yeah, it's really interesting to think how that feedback loop works. You know, if central banks keep pushing back against inflation expectations, saying that's not what we see, then investors go out and buy commodities, and maybe that drives some inflation, and then we do see it. Let's think about inflation then, Laura, because we have US inflation out later. I've been on the Waco function, tells me what's expected in these markets. This is going to be crucial. Plus, we have the auction, of course, in the Treasury markets. 10-year, I think, today.
So we've had kind of the bond sell-off take a bit of a reprieve lately, and I think that does set up potentially for fireworks later today. So like you mentioned, we do have that 10-year Treasury auction. Will we see kind of that sail through with robust bids, similar to what we saw yesterday in the 3-year? And then, of course, we have that US CPI print. Now, the February gauge won't yet capture those year-on-year base effects from the oil collapse last year, but we are expected to see a strong surge in energy prices through gasoline. So that should bolster that headline gauge to the highest that it's been in about a year. So if we do see even further upside pressures to that could certainly shake up what we're seeing in yields, and we could see that sell-off resume once again as traders price in more of those inflation risks.
Laura, thanks very much. Laura Cooper, Bloomberg Markets Live macro strategist. Lots to look out for later today then when it comes to those Treasury auctions and when it comes to the data. We'll look for the data on inflation out of the United States. That is it for the European Market Open. Surveillance Early Edition is up next. European equity markets taking a pause for breath, it seems, right now. US futures point modestly to the upside. This is Bloomberg.
It's time to move even higher. Stop on profit for euro. I'm going to move to 118.87. Just right here. Okay. We have already 10 pips in profit.
It's such an interesting new world.
The world is changing.
For us, it's not about being first. It's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. It should just be something that people do.
I have asked the Securities and Futures Commission and the Hong Kong EX to work together to explore the viability of our own Hong Kong version of specs. We remain very confident on the competitiveness of the Hong Kong stock market.
The one thing which has changed compared with December is the 1.9 trillion US stimulus that will lift and global GDP growth by about a full percentage point.
Emerging markets are going to benefit from that. China, India.
The risk of doing too little to help American families outweighed the risk of doing too much.
This is Bloomberg Surveillance, Early Edition with Francine Lacroix.
Well, good morning, everyone, and welcome to Bloomberg Surveillance, the early edition on Wednesday, the 10th of March. I'm Francine Lacroix here in London, and here's what's coming up on today's program. Bounce back. Tesla leads the resurgence in high valuation stocks overnight, driving the Nasdaq to its biggest advance since last November. But can it maintain momentum? The big breach, Silicon Valley, suffers its second cyber attack in almost as many days. Hackers gain access to 150,000 live surveillance cameras in hospitals, prisons, and Tesla's offices. Plus, JP Morgan hosts its annual Chief Executive Officer Forum today. We'll be joined by the company's EMEA Chief Executive, Vis Raghavan, shortly, and then the NL Chief Executive, Francisco Starace, also joins us ahead of the event. Well, first thing is first, of course, the obsession with inflation has dominated the markets over the last couple of weeks, so let's get straight to the markets. High-value stocks staged a revival overnight. Now, after slipping into correction territory, the Nasdaq bounced back like a coiled spring, closing 4% higher. Now, that was led by gains in Tesla, which surged some 20% on Tuesday's session, adding $25 billion to Elon Musk's wealth in a single day. Amid this equity market madness, yesterday's three-year U.S. Treasury auction stood out. Even though yields remain high, the sale drew the strongest demand since June of 2018. So let's get more. Sale drew the strongest demand since June of 2018. So let's get more on all of this with our Danny Berger. Danny, what do the markets actually look like today after the up and down that we saw in the last 3 day, trading sessions?
Yeah, I have to say it looks pretty muted compared to what we saw, given the dramatic moves. Yesterday, if you look at momentum in the U.S., for example, it was its biggest gain since 2008. So considering that a move of 6 basis points on Nasdaq futures, that's not much at all. It did start negative on the day, so a slight turnaround. But I think if you look at it compared to Europe, which is up 0.1%, you're still getting hints that value is outperforming growth, which would indicate those higher yields, that concern about inflation, and just the growth cycle. If there's more growth, then those high flyers, those momentum stocks, they're not the only game in town. So it'll be interesting to see what Tesla and those type of stocks do throughout the session. Of course, how the session unfolds is going to be a lot dependent on 2 big events over the next 2 days, and that's the auctions, Francine. You mentioned the 3-year yesterday. The fact that that was so well received really meant that it was an impetus for people to go in and buy the dip. Today, 10-year auction, $38 billion. Tomorrow we get 30-year. How those perform are going to be important because remember, last time we got this huge spike in yields, those inflation concerns, people weren't comfortable with it, came off the back of a poor auction. So how much strength we see today is going to mean a lot for markets, Francine. Of course, CPI out as well.
Danny, thanks so much. Danny Berger there with some things that we're watching. And of course, CPI is going to be a big one. And that will give certainly a lot of financial muscle to some of this, maybe rotation or not. Now, joining us to talk about the markets is Viswas Raghavan. He's JP Morgan EMEA Chief Executive. He joins us as the investment bank is hosting its annual Chief Executive Officer Forum in Europe. It brings together hundreds of C-suite clients across the continent to discuss the challenges and opportunities for business, including the pandemic recovery, the UK's future relationship with the EU, and climate change. So, Viz, thank you so much for joining us. I know it's a big day for JP Morgan as you try and kind of, talk about all of that in little time. Because when you look about the rotation and actually all of the chatter about inflation that's really dominated the markets, what are you seeing in the markets nowadays?
I mean, look, Francine, good morning, and thanks for having us on this day. Look, I think what we are seeing in the markets is, first of all, a phenomenal wall of liquidity. I mean, the market is awash with money, and you are basically seeing every asset class being chased, pretty aggressively by investors. What you are also sensing is kind of the first kind of the niggling kind of signs of inflation coming in. Your colleague commented on this earlier. And, when you look at our own assessments, I mean, we see global GDP in the quarters to come around 7.5%. We see inflation, global inflation, core inflation around kind of 3% in the quarters to come. So yes, I mean, there are the kind of the initial signs that, the economy is the markets at least are really, have responded really well post-COVID, and fears of inflation are on the horizon.
So, Viz, what does it mean for the kind of zigzags that we can see on the markets? What does it mean for your traders? Are we going to see this rotation continue? Is it something that you get asked about often from clients?
I think you will see an element of rotation continue because the reemergence of a yield curve means, banks, financial institutions, etc., are going to really benefit from a more NII and the like. But what is also very much the theme here is the incredible stimulus we have seen. If you look at the last count, I mean, we are talking about $10 to $12 trillion of quantitative easing that's been injected into the system. We have fiscal stimulus. So all of this money is going to underpin and sustain asset prices. So we are still really bullish on equities. We do see a recovery theme continue. We see GDP growth continue. I think there is pent-up demand. I mean, if you take the consumer who's been bottled up in lockdowns and the like for the best part of a year now, I think there's really a desire to go out and go consume, go spend, start living again. So all of this points to a kind of a healthy economic recovery. So we are going to see sustained interest in equities. You're going to see an element of rotation happen. But also remember, when you look back at this crisis, I mean, we will clearly look at this as an inflection point where we well and truly embrace the digital age. So technology is kind of more than just kind of, episodic kind of activity. It's pretty much now present. It's omnipresent. So tech stocks will clearly, you'll see kind of, rally correction, but tech as a theme is an overriding theme in the marketplace today. Just one other point I'd make is if you look at, the UK itself, we have 3 tech IPOs in the market. We are working on the Deliveroo IPO. Trustpilot is out there. So really, when even you look at the primary activity, tech is very much a theme that's out there.
But Viz, when you talk about some of the tech stocks and you say rally correction, at what point does it stabilize? So when do we know if we've hit the correct valuation, when it's no longer too lofty?
I would say, look, I would almost kind of point to valuations in the context of the investment thesis, the equity story, and the future growth potential. So it really kind of varies. So if you look at some of the themes that are emerging in tech, especially around EV, autonomous driving, likewise, what the pandemic has shown is a real kind of a drive to, technologies in medicine, whether it's medtech, life sciences, biotech. So some of those themes are really now part of the way we consume, the way we live. And what you will find is it really is a function of the growth potential, the upside potential, and the investment thesis in these stories. So this rally correction scenario, some of it is macro-driven, some of it is really driven by the investment outlook, the quest for yield. Remember, we still, despite kind of the talk of a more robust yield curve emerging, I mean, real interest rates are very benign. I mean, you're talking very low, zero, negative in most jurisdictions. So the quest for yield continues. So this volatility that you see is really going to be a function of more single name led. It's going to be more kind of thematic as the quest for yield evolves. But I would kind of say overriding all of this, healthcare technology and the undercurrent that is very much every industry is now driven and fueled by the tech revolution. that theme is very much here to stay.
Viz, what does it mean for the great rotation actually in treasuries? Is the most important call as a market participant now to make that you get the treasury call right?
I mean, look, you will gradually see this rotation happen. I don't think it's going to be seismic. Whether it's whether you go into 10 years today, I mean, question is out whether now's the right time. Do you hold off and you wait, for some time before you pile into kind of 10-year bonds, etc.? So I would kind of really, time it, pace it. It doesn't have to be knee-jerk. It doesn't have to be, all or nothing. And really, you have to be astute. I mean, this is going to be rally correction. Nobody's anticipating a crash. And really, it's all about making your market movements, really predicated on timing and reacting to single name investment thesis. I would not kind of really look at it in a very binary fashion.
Viz, could the demise of Greensill actually be systemic?
Look, I would say that Greensill is going to be much more contained. If you look at, just this morning, there's been talk of Taulia, with who had legacy supply chain funding arrangements with Greensill, and Taulia is a strategic partner for us. We took a strategic investment in them over a year ago, and really I think what we did was step in with a funding commitment to really help Taulia and Taulia's very many supply chain clients. So I would say, as it regards to Greensill, I mean, I don't think it's going to be systemic. Various players in the market will step in, and effectively the liquidity in the system and the strength of the financial system will assimilate, failures of this order.
Viz, is there anywhere, any other part of the market that's attached to Greensill, which you could see JP Morgan having to step in?
Look, I mean, this is an evolving situation, so I would rather not comment on that. But Taulia is an example of where we effectively, supported our strategic partner and Taulia's clients.
Viz, thank you so much. Viz Raghavan of JP Morgan stays with us, and we'll talk a little bit more about working from home as well. Now, Smart Conversations on Bloomberg Surveillance Early Edition. Later on in the show, we'll be speaking exclusively to one of the chief executives of the world's biggest alcoholic drinks makers. My voice is gone. It's probably what I need right now. Maybe a gin and tonic or something like that. Ivan Menezes of Diageo joins us, but before then, we'll also have a chat with Francesco Starace of Enel. This is Bloomberg.
Of the world's trade travels by sea. At any given time, around 5,000 ships are on the ocean carrying containers. Without them, the global economy would collapse.
Many of those containers pass through here, Singapore, the world's second largest port. The industry accounts for 7% of the country's GDP.
But the industry is under pressure. The uneven recovery from the pandemic is creating a shortage of containers where they're needed most and driving bottlenecks at major ports. It sent freight prices soaring.
Since the beginning of COVID-19, these are levels of shipments that we've never seen before.
Chinese New Year marks a seasonal turn for freighters when rates are renegotiated for the next year. Companies must choose whether to swallow the financial hit or pass on the cost. It's a decision that could bring new headwinds for the global economic recovery.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
For us to go back and have every single individual coming into the office 5 days a week feels to me a little bit like a wasted opportunity. So, whilst we have had a core number of people that have been coming in throughout the entire pandemic because it was not possible for them to do their jobs from home, so particularly on our trading side and in terms of our tech space, there's also great numbers of people for whom actually a more flexible working pattern actually is something that they welcome. So whether it be at the beginning of the pandemic or actually most recently, the feedback that we've had from our people actually tells us that they want to work at least 1 to 3 days from home at some point in the future. So that doesn't mean for everybody, but certainly I think that is something which we'll be looking to explore in the coming months and years.
Well, that was the Deutsche Bank UK and Ireland Chief Executive Officer, Tina Lee, speaking on this program on Monday. Deutsche Bank may let staff work from home between 1 and 3 days a week, so is remote working a trend that's here to stay? Well, we're back with Viswas Raghavan of JP Morgan, who's still with us. Viz, when you look at working from home, does it depend on how fast a country can vaccinate? So is your working from home expectation different in the UK compared to Germany and France?
Absolutely, Francine. So clearly, I mean, we've been big advocates of, vaccinations really kind of kickstarting the whole kind of the revival of, folks getting back into the office. But what is very clear and what the pandemic has proven to us is how efficient we can all be. I mean, we process record volumes, through the dark days of the pandemic. Effectively, you saw, most folks really kind of, from a home. We talked about homeschooling and juggling work life and kids and family, etc. And we processed all of that. And what we see now with this kind of vaccine impetus is really, some degree, some semblance of normalcy slowly coming back into the way we, conduct our daily lives. And as you said, I mean, it's not one size fits all, depending on how, every jurisdiction, where they are in this evolution. I think they will kind of come along. What is very clear is we are very much looking at some form of a rotational model where you draw on the best experiences of the working from home regime during the pandemic. You really still kind of try and preserve the camaraderie and the creative input that comes from a work environment, and really try and kind of match and marry the best lessons learned from both to have a kind of a future RTTO plan.
Viz, let's also talk about SPACs, which is the big new thing that everyone's been talking about for the last couple of months. What is it? Is it a new asset class, and what does it mean for JP Morgan?
Look, I haven't had a single discussion recently where SPACs wasn't a topic. I mean, look, this is very much a very visible, real tool. It is part of the corporate finance toolkit today. If you look at the numbers, they're staggering. I mean, whole of last year, we had about 230 deals in the United States, raising in excess of $80 billion. This year we've had in January alone over 100 deals raising $20 billion. So that's kind of the sheer kind of volume of liquidity, money chasing these SPAC opportunities. I think the key here is the key here is the de-SPACing effort. So the SPAC itself, I mean, it is a capital raising exercise. It's a commitment exercise. But really, the genius is in not just raising the SPAC, but the genius is in de-SPACing and the pipes and the investment ideas that come through. And here, I think the focus really.
No, does it just show that there's too much capital in the world? Is there too much is it too abundant?
Oh, absolutely. It once again, points to the point we raised earlier. I mean, the amount of liquidity that is in the system is staggering. I mean, when you look at the stimulus and the QE, etc., there's a lot of money looking for, investment opportunities. So, absolutely.
You're also expanding your retail bank beyond the U.S. You're coming here in the U.K. Are there any other countries where you want to be part of?
Look, I think the digital bank in the UK is really our first foray outside of the United States. It is a digital offering ground up. The UK is a great market in which to kind of test our offering. I mean, it is sophisticated, it is well banked. You have a fantastic regulatory framework. So really, I think we want to make sure that we want to see it's in pilot stage right now. We want to see how it's received and really reserve our ambitions based on how the launch in the UK pans out. So we're super excited about it.
Viz, just going back to SPACs, are you expecting this to grow even more from here? Is there is there a limit to how many SPACs we can have?
I think it's not going to grow in the same way that this thing has blossomed so far. As I was kind of alluding to earlier, I think the thing with SPACs now, it's going to be quality, not quantity, because you will increasingly get to a point where investors are more selective. It's going to be about the robustness of the management teams, the strength of the sponsor. It's going to be around their proven track record. As I said, this ability to de-SPAC and de-SPAC well is going to be key, because that's really where what defines the success of a SPAC. Otherwise, many of the folks who have done SPACs who are not able to de-SPAC effectively will just end up having to give their money back. So I think you will see a flight to quality in SPACs, and the deals that you see coming are going to be increasingly going to be more, investors are going to be more selective, and you're going to see the strongest and the ablest management teams get done. One theme, though, is this: what has been so far predominantly a U.S. phenomena is now hitting EMEA in a fantastic way. So really fasten your seatbelts, because this move is coming to this region, and we are seeing a lot of inbounds from very high quality folks wanting to raise SPACs.
Viz, we only have a minute left. I wanted to ask you whether you're planning to move any more assets or people in Europe because of Brexit.
Look, we've done the move, so we've been ready for Brexit for the best part of 4 years, and all the asset moves that we had to do to be functional from day one, those have happened. We now watch with bated breath as to how equivalence looks and where we end up on financial services. But we are ready. We are serving clients. I mean, it's seamless. But now the next steps are really going to be driven by what the equivalence looks like and where we land on financial services right now.
Viz, thank you so much. I know you're a busy man, but next time we need you on air with me, possibly here in the studio for 2 hours, because we also need to talk about ESG. I know one of the big themes at the Chief Executive Officer Forum for JP Morgan. Viz Raghavan there, JP Morgan EMEA Chief Executive Officer. Now, Smart Conversations on Bloomberg Surveillance Early Edition. Later on in the show, we'll also speak exclusively to the Chief Executive of one of the world's biggest alcohol drink makers, Ivan Menezes of Diageo. Before then, we'll have a chat, though, with Francesco Starace from Enel, and that's an ESG conversation. This is Bloomberg.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Economics, finance, politics. This is Bloomberg Surveillance, the early edition. I'm Francine Lacqua here in London. Now, this is what we're looking at pre-market. Now, yesterday it was all about NASDAQ. It was down, then it was up. And actually yesterday, Tesla, for example, rose 20%, which added an extra $25 billion to Elon Musk. Now, this is what we're seeing pre-market. So pretty much flat for Tesla, but actually GameStop, some people would say, gaining 13%. Coming up, a conversation on ESG with the Enel chief executive. This is Bloomberg.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
Their CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Bounce back. Tesla leads the resurgence in high valuation stocks overnight, driving the NASDAQ to its biggest advance since last November. But can it maintain momentum? The big breach, Silicon Valley, suffers its second cyber attack in almost as many days. Hackers gain access to 150,000 live surveillance cameras in hospitals, prisons, and also Tesla's offices. And two exciting conversations. Well, Ivan Meneses of Diageo joins us exclusively, and Francesco Starace of Enel joins us next. Well, good morning and welcome to Bloomberg Surveillance, everyone. This is the early edition. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine.
European Council President Charles Michel is accusing the UK of blocking export of COVID-19 vaccines, saying he is shocked, but has drawn a sharp rebuke from the British government, who are vehemently denying the move. Bloomberg sources tell us Foreign Secretary Dominic Raab has written a letter to the EU saying the claim is completely false. Now, the airline sector says most governments are moving too slowly in setting out a roadmap for a return to air travel. Industry group IATA says Britain has detailed plans, but more countries need to act. It thinks by the end of the year, air travel will be about half the level of 2019.
The virtual tools is our strong competitor to travel, but they will not replace travel. For the business travel, it will come back, but probably 12 to 18 months later and after the personal motivation for air travel.
And Russia is planning to slow access to Twitter. That's after announcing a lawsuit against it for not deleting posts about last month's protests over the jailing of opposition leader Alexei Navalny. Russia didn't directly mention the demonstrations in the new order, saying the move is because the social network failed to remove content unsafe for teenagers. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Now, Europe's biggest utility, Enel, has signed a $12 billion loan, the largest ever tied to climate goals. The deal beats beer giant AB InBev's record last month, and this is Enel's second milestone in sustainable debt. Now, the Italian utility was the first issuer to actually sell bonds with terms tied to sustainability goals. Well, we're delighted to be joined by Enel Chief Executive Francesco Starace, who is participating in JP Morgan's virtual CEO forum today. So, Francesco Starace, thank you so much, as always, for joining us on Bloomberg Surveillance. When you look at the amount of work that you've done in issuing bonds, and I remember actually it was about 18 months ago that we first started talking about it, I believe on the riverbanks of Lake Como. How much more is this now mainstream? How many more of your rivals are you expecting to come in and actually try and issue some of these bonds linked to sustainability?
We saw this coming at that time. I remember it was at the beginning of this strange year, 2020, but we expected many more companies to follow suit, because this is a very interesting financial instrumentation that is now being deployed, and we see that happening. We've seen companies getting through this, although 2020 was not really an ideal moment for this kind of innovation to take place. But we are very, very happy to see that we have companies all over the world, from luxury goods to pharmaceutical to food, agro-food industries, picking up the challenge of inventing new combination between the SDGs, the Sustainable Development Goals, and financial instruments. So the game is now choose your target and tie it to a commitment, and then go out in the market and ask for money to sustain that effort. It works, and we've seen this becoming now quite kind of a very important new financial dimension.
Have you actually considered adding new sustainability targets to some of your financing? So be it more social, being complied more on governance, or even women on boards?
I think we have, the SDG recommendation is that a company that focuses on more than 3 and 4 of the SDGs lacks of focus. So we have 4 SDGs as main goals, and they are the numbers 7, 9, 11, 13, and they all have to do with our activity. Basically, we will link most of our activities and most of our commitments to decarbonization, renewable growth, and also life in cities. So I think the next waves will have to do with improvement of living conditions in large metropolitan areas. I think the S dimension will come into focus probably a year from now, because we need to first get through this in a let's say, methodical fashion, and we cannot jump from one thing to the other. But we have for these commitments more directly linked tools to the remuneration of management. So we have that into the management remuneration, not yet into the commitment on the loans and on the bond community. That typically takes place a year or two afterwards.
But what will you actually do with the savings from the sustainable linked loans when interest rates get reduced when you meet your ESG targets?
They simply go into lowering our financial costs. So they will make our company more competitive and more able to continue and accelerate on the sustainable path. So it's a company-wide effort. They don't go into single projects.
Right. Do you see, because of the recovery fund, because there's a new prime minister in Italy, a lot more attention on ESG, and how helpful is that as you try and achieve some of those goals?
I think it's really helpful, and you know, to look at it from an Italian perspective, Italy is quite a sustainable economy in its own. It's one of those that has less energy input per unit of GDP. It's quite an efficient system, and it is also a very circular economy under many points of view. The points that I just outlined are not fully understood by the Italian economy in itself. So it's like we are unconscious of this. So if we get to put our arms around how sustainable we have already become and how can we progress, then I think Italy can benefit from a lower cost of debt too. In fact, I think we've seen the Treasury emitting the first ever green bond, which is, you know, the first really tiny step in that dimension a couple of weeks ago. So it seems that they finally are getting into that line of thinking, and I really think it should be done at Italian level and also at European level.
Francesco, given we have a new Biden administration, so a new administration in the White House, given it's COP26, and so there's going to be maybe a lot more efforts, is now the year where we're going to see much more green bond issuance overall from European companies?
I think there will be a continued issuance of green bonds, and I remember green bonds are project-linked instrumentation, so they are a bit cumbersome to manage, and they are not necessarily an index of the company becoming sustainable. They just indicate that a certain initiative of the company goes in that direction, but not the company as a whole. I think that will continue, and that trend will still be there for a long, long time, but it will be, let's say, in parallel to that, you will see the growth of holistic, sustainable tools that do not target a single initiative or a single project, but the company as a whole. So how to make the company more sustainable and not just a single initiative of the company. You know, I can be a very unsustainable company, but still put a solar roof on my factory, and that qualifies for a green bond, but it doesn't indicate that I am particularly sustainable.
Francesco, thank you so much for all the insight. Francesco Starace there, the Enel Chief Executive, of course, doing a lot of good in the sustainability space. And so we'll catch up with Francesco very soon to see if there's any more updates on some of those financing. Now, Diageo has been ranked the #1 business in the UK for female representation. Up next, we speak exclusively to the Chief Executive of one of the world's largest alcoholic drink makers, Ivan Menezes. And if you have any questions for him, you can just IB plus TV Go. This is Bloomberg.
Expect that face-to-face learning is the ideal, but I don't think that we are ever going quite back to that. What we're seeing is more of this integration of the technology into the day-to-day. We have seen that schools have had this kind of trial by fire in terms of trying to reopen successfully, and that many schools have had to use a system of using different ideas around what it would take to reopen and then pivoting when those ideas did not work well, meaning that some have had to go back and had to close. And that's been a global challenge.
Start your mornings with Bloomberg Surveillance. Tom Keene, Jonathan Ferro, and Lisa Abramowitz. Extraordinary market day.
This rally just keeps on going.
But there is a tipping point.
The business team you love to watch. Weekday mornings on Bloomberg Television.
The inequality of the current world environment. It's troubling, and I think it's actually getting worse, which is a big challenge.
The World Bank president there, David Malpass, is speaking to Bloomberg a little bit earlier on. Now let's talk about equality with our next exclusive conversation. Diageo has been ranked as #1 business in the UK for female representation. That's according to this year's Hampton-Alexander review. Now, the maker of Guinness and Johnny Walker has surpassed the review's index with 60% women on its board and 37% women in leadership roles. Well, joining us now is Ivan Menezes. He is the Diageo Chief Executive Officer. Ivan, first of all, congratulations on those figures and really trying to spearhead a world where there's more gender equality and more diversity in general. What have you learned in going through the process that would be precious advice for others?
Good morning. I'd say inclusion and diversity is at the heart of our company. It's in our purpose, our values, and integrated into our strategy. And the business benefits are enormous. Obviously, the society benefits are enormous. But my view is this makes for better business. And diversity in all its forms, we're talking about gender today, but we've also set aggressive goals on ethnicity. In 2030, we've committed to getting 45% of our senior leadership teams to be ethnically diverse and parity on gender. And it leads to better decisions, it leads to better performance. And at the end of the day, a consumer business like ours, if we don't reflect our marketplace, we will not be fulfilling our top-tier potential.
But Ivan, has it made also for a more interesting or easier conversation with shareholders? Is it something that shareholders, you think, overall will demand more of companies?
Yes, and it is moving on all ESG dimensions. But I do think diversity...
Okay, guys, I'm going to place a stop on profit for Bitcoin. The price I'm looking to sell if it change, the price will change direction, 54,739. 4,739. It will give us 0.5% of profit from whatever, for you, for us, it will give us £500 in profit. For you, whatever broker pays you, what kind of margin you have, and or how much contracts, how many contracts, or how many Bitcoins you hold. Okay? So placed, and nothing can change. So if it will change direction, it will be field executed at price 54,739. It will give us 0.5%, 0.5% in profit. Stay safe.
Dispute, which was the cause of these tariffs. So a business like ours is a global business. We require conditions for free and fair trade, And I do believe, and I'm optimistic, that we've well positioned now for our whiskey business to do better. The UK, coming out of Brexit, with its independent trade strategy now, has the opportunity to strike deals with many markets around the world, which could be favorable for us. So having an orderly, free global trading order is very good for the whiskey business.
Do you see bars or people restocking from the U.S., Ivan, or are you expecting actually that to happen when things reopen a little bit? So, you know, how much it was tariffs and how much it was the pandemic and bars closed?
Well, I'd say the U.S. trends across spirits has been very strong. And in our results, our spirits business in the last half in the United States grew 15%. And it is not just whiskey. Our tequila business, Don Julio and Casamigos, growing at very high growth rates. A brand like Bailey's grew double-digit, Bullet Bourbon, Ciroc Vodka. The trend towards drinking better has accelerated through this pandemic. People are moving to more premium brands, and spirits is gaining share from beer and wine. So what we're seeing both in the at-home occasion and as the recovery happens, as bars and restaurants open, the human desire to socialize and celebrate in and outside the home is very, very strong. And our business, as a result, is coming through stronger. We're gaining market share in most parts of the world. And we're benefiting from people drinking better because we have a very premium portfolio, and that's growing the fastest in our business.
Ivan, are there any M&A gems out there that have been thrown up because of the pandemic? Are you targeting anything that now looks a lot cheaper because actually bars were closed and so valuations came down?
Well, through this last 12 months, we've stayed invested in the business on our marketing, on our capital spending, and on M&A. We've done 3 deals. Aviation Gin in the United States, that was $600 million. We bought Chase Gin in the United Kingdom. And just this week, we've announced a Ranch Water, which is an agave-based seltzer business that we bought in the United States. Lone River Ranch Water, which we're very excited about. So there are opportunities. We want brands that have a good runway for profitable growth. And we're very much on the hunt to find attractive brands to add to the portfolio.
When are you expecting things to reopen, Ivan? I mean, I know it's been so difficult for a lot of bars, restaurants, the hospitality industry, and therefore also Diageo. Are you expecting, you know, that these vaccines work and that will be almost fully reopened by the summer in the UK and elsewhere?
I'm cautiously optimistic. We do see light at the end of the tunnel. What I would say is in many parts of the world, actually, our business is fully back. The United States and China is growing very fast, ahead of pre-pandemic levels. In Europe, where half our business is out of home, linked to bars and pubs and restaurants, we're confident that that business will come back. So my expectation is from here on, we will see steady improvement. And in the 6 months of results we announced ending December, Diageo was already ahead of our pre-pandemic levels. So the business has really resilience, it's got momentum, and our marketing has been very creative in terms of connecting with consumers as they go through this difficult period. And so we've benefited because we've had very good market share gains around most of the world.
Ivan, you know what my 25-year-old producer is asking me? You know, how many of your drinks are going to be alcohol-free in the future? This is how the pandemic and like healthy eating, you know, it has changed the world. Is that going to be the bigger trend over the next 4 to 5 years? Less alcohol?
I'd say there's 2 trends. One is people drinking better. So those that drink alcohol are going to move to more premium brands, and we benefit from that. You know, Diageo has only 5% of the dollars in the world's drinks. So there's a enormous opportunity to grow there. But then to your point, we do see lower and no alcohol product offerings being an attractive additional growth opportunity. We've recently launched Tanqueray 0.0 and Gordon 0.0 in the UK market. It's doing very well. We acquired the Seedlip brand So there's good growth there, but it's for occasions. It's what do you drink when you don't want to drink on certain evenings when you go out, and we will have an offer for that as well.
Yeah, we'll save that for the non-homeschooling days. Ivan, thank you. Ivan Menezes there, the Diageo Chief Executive Officer. Now, coming up, hospitals, jails, and car maker Tesla are all amongst the victims of a massive hack, the latest breach to plague the cybersecurity world. We have the full details next. This is Bloomberg.
Women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Economics, finance, politics. This is Bloomberg Surveillance Yearly Edition. I'm Francine Lacqua here in London. Now, Silicon Valley has suffered its second massive cyber attack in almost as many days. A group of hackers say they've been breached a massive trove of security camera data managed by startup Verkada, gaining access to live feeds of surveillance cameras inside hospitals, jails. Car maker Tesla is amongst one of them. Well, joining us now is Bloomberg cybersecurity reporter Jamie Terabyte. Jamie, this is incredible. Who exactly is responsible for this, and what is Verkada doing about it?
Well, the people that are behind it describe themselves as an international hacker collective. And they say one of the reasons that they did this was because they wanted to show, just how easy it is to break into these systems, the pervasiveness of surveillance systems, and also just, sort of highlighting the intrusions that go on in a lot of these places. Some of the camera footage that they had access to were inside hospitals. They were able to see people, employees, penning a man to a bed. They were able to look into police stations and watch people getting interrogated. And they did it so easily, too. They were able to find the administrator account, sort of the credentials, the username and the password, just publicly available online. And just being able to sort of show people what is possible with their data has been something that Verkada is really sort of scrambling to try to address right now. They have basically said that they've shut down all the internal admin accounts. They're launching an investigation to address the size and the scope of the hack, and they've also set up a support line to sort of talk to customers and walk them through what they can and cannot do to address it.
Jamie, so what questions does this actually raise about cybersecurity in Silicon Valley?
I think one of the questions that this highlights really, and we've seen it before, we saw it not too long ago with sort of the Clubhouse breaches. When you have something that's new and amazing and does very, very well, when it gets valued, and sort of the rounds of venture sort of capital that go into it, whether there's a lot of thought that goes into the privacy end of it, whether there's a lot of thought that goes into securing the security for the customers when they're making a product. And I think that this is a very good example of what happens when they're not really paying attention to those details, which may not appear critical to them, but are very much so for everyone else.
Just an outstanding story. Thank you so much, our Bloomberg security reporter there, Jamie Terabay, joining us. Now, Bloomberg Surveillance, the early edition, continues up next.
We will start soon delivering also COVID-19 vaccines once all permissions have been granted. We are in discussion with Ministry of Health, with current logistic partners in different countries. So we're looking at Southeast Asia right now on delivering COVID-19 vaccines. We are also setting up already on the African continent in already one country and looking at the second country to expand.
Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, early edition. Weekday mornings on Bloomberg Television.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
The one thing which has changed compared with December is the $1.9 trillion US stimulus that will lift global GDP growth by about a full percentage point.
Emerging markets are going to benefit from that. China, India.
The risk of doing too little to help American families outweighed the risk of doing too much.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua, Matt Miller, and Keely Lines.
Well, good morning from London, Berlin, and New York on this Wednesday, March the 10th. Our top stories today. The big boost: the House is set to send that $1.9 trillion stimulus bill to President Biden for his signature. It's one of the largest economic relief packages in U.S. history. Bounce back. Tesla leads the resurgence in high valuation stocks overnight, driving the NASDAQ to its biggest advance since last November. But can it maintain momentum? And the big breach: Silicon Valley suffers its second cyber attack in almost as many days. Hackers gain access to 150,000 live surveillance cameras in hospitals, prisons, and even Tesla's offices. Now, we have quite a lot going on, Matt. I actually cannot believe this hacking story. I know we had a reporter. We'll speak to Alex Webb on it shortly as well. I mean, it's absolutely chilling to think what they had access to, and that kind of ties back to some of the biggest risks for the year ahead.
Yeah, I mean, having seen all of the Bourne Identity movies, including those after Matt Damon left, which I also thought were really good, I knew that hackers could get into video surveillance cameras. Hackers can get into everything, and apparently this hacker is one of the best in the world. So you've got to assume that that's possible. What I think is interesting is that one company is operating so many cameras, right? I think 150,000. That seems like a lot. I would operate my own video surveillance network.
We should have also predicted the pandemic just because of contagion, Matt. You're absolutely right. We need to be more on top of these Hollywood blockbusters and what they tell us about the future of the world. Also Matt Damon. He's, they're also a Matt. There's something going on. Let's get to the I don't know if there's a Matt in the markets, Kaylee, apart from our own Matt Miller.
Maybe Matt Damon should play Matt Miller in his biopic. I think that may be my favorite casting candidate. But in the markets, we do, of course, have to pay attention to what's going on. Maybe not as many fireworks as we saw yesterday. Right now, the moves are pretty marginal, both in Europe and when it comes to U.S. futures. Right now, the NASDAQ 100 futures only up about 0.1%. But, of course, that is after a monster comeback rally yesterday. The best day for the index since November. A very stark reversal of the rotation. The question is, does that stick today, or was it just some dip buying after the index plunged to deeply oversold levels? Of course, the equity market's taking a lot of its cues from the bond market. Right now, the 10-year yield inching back up about 3 basis points, sitting at 1.55%, ahead of a $38 billion treasury auction later today. And the dollar giving back some of its earlier strength, sitting right now just shy of 92 on the dollar spot index. As for some of those technology movers that had outsized gains yesterday, a check on what they're doing in the pre-market. ARK Investment Management, Cathie Wood's fund, its basic flagship fund, ARK Innovation, had its best day ever yesterday. It's up another 0.9% in the pre-market. Tesla, 20% gain in the Tuesday session. It is also higher before the bell. Apple, though, is fractionally lower, so it looks like it could be a mixed day for big tech. We will pay attention to what those heavyweight names do come the opening bell in about 4.5 hours time. As for what else we're watching today, an important read on inflation is coming up at 8:30 a.m. Eastern time. February CPI data will be very closely watched. At 10:30, we get the EIA crude oil inventories report, and then, of course, at 1 p.m., that $38 billion 10-year auction from the Treasury. What will demand look like? It was pretty solid for the 3-year yesterday, and then on all day today, we are watching Capitol Hill for the House voting on that $1.9 trillion stimulus package, Matt.
So I think it's interesting to watch yields and those tech stocks. I did see on Joe Weisenthal's Twitter this morning that Tesla is up in the pre-market already. But you see yields there up, as you showed, Kaylee, as well. This chart, I think, shows a great inverse correlation. And we've seen that sink to the biggest since 2016. We talked about it on this program before, but here in white, you see the NASDAQ 100, and in blue, you see the 10-year yield. If you see the yield continue to rise, maybe you see the tech stocks continue to fall, Tesla notwithstanding. So I think it's an interesting relationship, really, to keep your eye on. Francine?
Yeah, Matt, I think Tesla pre-market was up 1% and then it fell slightly. Hackers say they gained access to 150,000 surveillance cameras inside hospitals, companies, police departments, and even schools. Now, among those whose footage was exposed, the car maker Tesla and software provider Cloudflare. Now, to make sense of all of this, Bloomberg opinion tech columnist Alex Webb joins us. Alex, I mean, this is huge and frankly terrifying. First of all, how is it possible that a collective of hackers can hack 150,000 live feeds?
Well, the details that are outlined in William Turton's story, which I recommend everybody reads, it's really good, suggests that the hackers actually found administrator sign-in privileges on the open web. They found it online, which makes it sound a lot like it's human error, that ultimately you can have the most secure systems in the world, but if somebody exposes their password, it's quite easy to get in. Don't know if there was dual-factor authentication, for instance, that might have made things a little bit more difficult. And then, yes, that second point, it points towards, the concentration of access in, not many hands. The ability through one account to see a huge number of accounts, echoes of the Edward Snowden affair, where huge numbers of US contractors were able to access a lot of data, which was quite sensitive. And so it does raise questions inevitably about some of the security practices at this company. But if this is a company which ultimately is in the cybersecurity business to an extent, certainly in the security business, there are questions about every company in the world, and actually we do have to be on top of our most basic procedures to ensure that stuff doesn't get exposed.
First, I want to say I absolutely love the look. I'm not sure if Robert Downey Jr. would play you. Well, I think Robert Downey Jr., but the hair's very McConaughey. Do you think that there will be any kind of regulatory backlash to this? I mean, my first thought was to watch these stocks today to see if they fall on that kind of concern.
I think it's probably far too early to tell on something like this. I think there's been a drip, probably a bit more accelerated than that, of news this year about sizable hacks that are happening. I think the cybersecurity is kind of looking at itself and going, well, what can we do as an industry? It tends to be quite fragmented. It's hard as a company to go and say, I'm going to get a turnkey solution which makes everything secure. You quite often have to go to a bunch of different players. Some companies are then looking at, well, do we do a roll-up and try to have a more comprehensive offering? From a business perspective, that's harder to achieve because you're not sure what the synergies are beyond on the sales side. So there's a lot of moving parts here which make it not an easy problem to solve. And from a regulatory perspective, there isn't an immediately obvious solution. This is stuff that companies should really be doing for their own benefit, not because they need a regulator to tell them to.
Yeah, I mean, I wonder whether lawsuits are in the working or not. Alex, thanks so much. Alex Webb there of Bloomberg Opinion, looking at all things tech. Now, coming up next, we talk inflation, of course, a main obsession of the markets over the last couple of weeks. We're joined by Paul Donovan. He's UBS Wealth Management Global Chief Economist. And then a little bit later today, Richard Haass, Council on Foreign Relations President. That's at 12 p.m. in New York, 5 p.m. in London, and this is Bloomberg.
in the beginning of 2021, what are your biggest worries?
The inequality of the current world environment. It's troubling, and I think it's actually getting worse, which is a big challenge.
This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Kaylee Lyons in New York. Now, it's one of the largest economic relief packages in U.S. history. The House is set to give final approval to President Biden's $1.9 trillion package. Now, it's likely to become law without getting a single Republican vote in the House or the Senate. Well, we're joined by Paul Donovan, UBS Global Wealth Management Chief Economist. Paul, I mean, the fixation on the markets is basically whether the inflation story that we've seen play out in treasuries, that we've seen play out in dollar, and of course in tech stocks is real. You have questions, but is this markets versus economists?
Actually, I think it's probably Republicans versus Democrats, as so much is in the United States these days, that if you support President Biden's fiscal package, then you're going to say, well, that's because there's deflation forces in the economy and we need to reflate. And if you don't support President Biden's package, you're going to say, no, the economy is doing fine, and this is just adding unnecessary gasoline to the fire. So I think this has become quite a partisan issue overall, rather than sort of economists versus markets, because we all know economists will win in that fight.
Of course they will, but if you look at the cost pressures at some point, Paul, I mean, you know, at what point does the Fed say there's too much inflation for me not to do anything? You know, despite you always being right, of course.
Well, we know the second quarter is going to get an inflation spike, and we know the Fed's going to ignore it because it's all about oil price base effects. Nobody was paying the low price for oil last year. That's why the oil price was so low. So, you know, the consumer doesn't really feel that either. What, of course, we've had is a surge in demand for manufactured product globally over the last 6 months, this shift away from services and towards goods in terms of consumer spending. But because manufactured product is part of very long, very complicated supply chains, you have had squeezes and disruption in those supply chains, and it has led to cost pressures. But the thing is, later this year, we're going to see a shift back to service sector spending. Service sector supply chains, short, simple, based on labor. What have we got an absolute abundance of? Unemployed labor at the moment. That's what the Fed keeps saying, that surplus capacity, the 10 million Americans who don't have jobs today, who did have jobs a year ago, that's going to keep down that inflation pressure when we go back to service sector spending.
Well, I wonder also, Paul, on the manufacturing side, I mean, you make a point that, put very simply, is we're all going to start buying stuff as soon as we get our stimmies, right? But we're also all going to start selling stuff. Is the capacity there, is the bounce back foreseeable in manufacturing as well?
Well, that's a very interesting question. So we've had two issues here. US manufacturing has not really bounced back in the way that Asian manufacturing or European manufacturing has. So global manufacturing has basically fully recovered from the pandemic, but the US has lagged behind in that. And I think as we see restrictions continue to ease, that capacity is likely to pick up. It does depend, of course, on the virus remaining contained, but the capacity there can pick up. But the other thing, and this still isn't being talked about enough, is this absolute surge in new business startups that we've seen. US, UK, Germany, France. I mean, the growth in business startups is absolutely exceptional. And a lot of that business is service sector. A lot of it is around transport and retail and so on. But some of that will be manufacturing. And with that, again, we've got an unknown impact on capacity and, of course, an unknown impact on competition because there are more firms competing for your stimulus check.
You know, on the manufacturing side, there's been a lot of constraint due to the commodities price increase, but also shortages in supply chains you mentioned. I think of automotive. You know, I ordered a new BMW R9T earlier this month. It's not going to be ready until May or even June. And you can see that across. Ford has issues delivering Broncos. Volkswagen has issues. FCA has issues. When are these supply chain constraints going to loosen up? We talked yesterday to the CEO of Continental. They can't make tires fast enough, but the problem is the cars just aren't being produced.
Well, you've got, as I said, with these long, complex supply chains, this is the problem. Are we going to suddenly resolve long, complex supply chains overnight? No, it's going to take years, 3, 4, 5 years before you start seeing more localization of production. But the kinks in the supply chain will iron out. You know, we've got Asia producing now at above pre-pandemic levels. We've got most of Europe producing at above pre-pandemic levels. Now, we've been running down inventory. We've had an exceptional surge in demand for goods. That sort of led to an imbalance, but it will resolve itself. This doesn't last forever. And of course, that means that companies have got to think, do we just ask our customers to be patient? Difficult in the United States, I know, but possible. Or do we raise prices? And I think what we will see is simply a number of companies saying, look, yeah, you're not going to get your car until May, but you will get your car in May, and we're not going to necessarily change the price because of that. So companies taking the longer term view may say this is a temporary supply chain disruption. We're not going to raise prices on the back of it. We're going to maintain customer loyalty to the brand instead.
Paul, I want to look ahead to tomorrow in the ECB decision. Policymakers in Europe have talked a lot of talk about reining in the bond market if necessary, but they haven't actually acted yet. What are you expecting to hear from Christine Lagarde tomorrow? Do you think that the ECB needs to make a move?
I mean, to be honest, I don't think we're at alarming bond yield levels. But then, you know, I remember 1994, and you know, this is barely a blip in comparison to, you know, a proper bond market sell-off. I think that the central policy of the ECB will be masterful inactivity. They're very good at inactivity. They do it a lot. So I think that's going to be the central thrust. And then we will get some well-meaning words around the bond market from ECB President Lagarde or other council members. We get that with the currency as well. And I think we're in that sort of situation where the ECB has a moderate degree of discomfort with some of the recent developments, as it sometimes has with the currency. You'll get some rhetoric coming out, and they hope that that calms things down. Doesn't often achieve that, but that, I think, is going to be the first stage response.
Well, I mean, Mario Draghi achieved it with whatever it takes, Paul. Does the Fed do the same, or do we actually need to see an ECB take a little bit more action?
I think that the problem that you've got here is that we've got a global bond market that is adjusting to the fact that the world economy is continually beating expectations, and let's not lose sight of that. I mean, the economic outperformance over the last 6 months, the surprise indices are sort of permanently pointing upwards. Data revisions are permanently pointing upwards. You barely ever get a German release without it being revised positively the following month. So we're seeing a lot of good news, and that's reflected in global bond prices. And there is a limit to what a single central bank, particularly the ECB, can do to influence global bond prices. I think that they can make sure that we don't get disorderly markets. I think the Fed is going to do that. I would be surprised if we were to see aggressive action at this stage after what is, after all, an economically insignificant move in bond yields.
Paul, thanks so much. Paul Donovan there of UBS Global Wealth Management. Matt, I love the way that you always talk about cars. And if you look at, some of the supply chain problems in terms of chips, I don't know whether it makes it more difficult to access some of the cars. Are you into cars, or are we buying a new kind of, motorbike?
Well, no, both of those things, but it's a good point. The chip shortage is something the Biden administration is working on, but I think it's interesting. Paul said those supply chains could take years to bounce back. The price, he pointed out, stays the same from the manufacturer, but I've seen just this morning a Ford Mach-E, just the base model of their new electric SUV, going for $10,000 over MSRP. And I know a dealer in Columbus who sold a Ram TRX for $20,000 over MSRP. So when they get to the dealerships, the markups are high.
Matt, I want to know how many of those stimulus checks actually go into buying either new cars or partially funding maybe a new motorbike. That's kind of the question of the day for me. And we also found out that Joe Biden is not signing the stimulus checks, unlike his predecessor. Now, later today, we also speak with the NYSE president, Stacey Cunningham. That interview, 11:30 a.m. in New York, 4:30 p.m. in London. And this is Bloomberg.
90% of the world's trade travels by sea. At any given time, around 5,000 ships are on the ocean carrying containers. Without them, the global economy would collapse.
Many of those containers pass through here, Singapore, the world's second largest port. The industry accounts for 7% of the country's GDP.
But the industry is under pressure. The uneven recovery from the pandemic is creating a shortage of containers where they're needed most and driving bottlenecks at major ports. It sent freight prices soaring.
Since the beginning of COVID-19, these are levels of shipments that we've never seen before.
Chinese New Year marks a seasonal time for freighters when rates are renegotiated for the next year. Companies must choose whether to swallow the financial hit or pass on the cost. It's a decision that could bring new headwinds for the global economic recovery.
It's such an interesting new world.
The world is changing.
For us, it's not about being first. It's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. It should just be something that people do.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in Berlin with Francine Lacqua in London and Kaylee Lines in New York. Let's get you your first word news, top stories from the Bloomberg terminal. In China, producer prices rose last month at the fastest pace in more than 2 years. That adds to the risk of global inflation. The Chinese producer price index was up 1.7% from a year earlier. That raises the prospect that China could start exporting inflation, a big concern for Francine, as factories raise prices for products sold abroad. It was a record day for one of the richest people in the world. Elon Musk made $25 billion yesterday. Musk's electric car maker Tesla rose 20%. That pushed his fortune to $174 billion, less than $6 billion short of the man at the top. Jeff Bezos. Deutsche Bank is being criticized by its own employees for giving other employees higher bonuses. Workers at the bank's call center subsidiary have been on strike for 5 weeks over demand for higher pay. One employee says, quote, "There's enough money for investment bankers, but not for us." Deutsche Bank increased its bonus pool this year. The biggest share will go to traders, whose performance led to the bank's first profit in 6 years. Now, I thought this was a really interesting story, and it's a problem that's been brewing for Deutsche Bank for a while. But the question is, does getting a marginally better trader make you more money than getting a marginally better call center employee? And when I was thinking about this, I was reminded of Trading Places. I'm sure you've both seen the classic Wall Street film in which they pick Billy Ray Valentine off the street, and he turns into an excellent trader. Eddie Murphy, of course.
Yeah, but if I want to be a good customer, I want to be, pleased with service. The person who takes my call is extremely important to me. The trader that makes money for the bank, a little bit less. So if you're client focused, I would go for increasing the salary of the person on the call center.
Yeah, I wonder if that's the question, not that people working in the investment bank should make any less, but maybe you need to pay the people working in the call center a little bit more.
Free money for all, stimulus checks, right? That's what the U.S. is doing. Let's do it for bankers as well. Coming up next, we'll talk about banking with Ottavio Marenzi, Opima's chief executive. This is Bloomberg.
Just COVID, but it's COVID related, but it's also stress related to job. I think COVID probably just sort of was the nail in the coffin for a lot of us. The destruction room here is also a very healthy outlet. I do not encourage it as something that we do on a regular basis, but I do find that when people come in, being able to break plates, being able to write out whatever's on their mind and letting it go, being able to just take out their frustration and their anger.
Come to a place like this and be able to break some stuff and release some tension without going to jail.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
This is is Bloomberg Surveillance, the early edition. I'm Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lyons in New York. Now, there's quite a lot going on in the markets. I know we talk about inflation. That's definitely been dominated market moves. But, Matt, I'm really interested in your BioNTech chief executive interview. You spoke to him yesterday, and there's definitely this spat between the UK and the EU, and it's not only going away, it's just getting worse.
Right. Although BioNTech has been actually quite good at delivering shots to Germany, AstraZeneca is the problem that Ursula von der Leyen has raised. And of course, the Germans don't have a great track record with AstraZeneca either. There was a point when the Chancellor Angela Merkel said, well, she's not in the age group, so she wouldn't be taking the AZN shot. Now it's been cleared, so I'm sure she probably would. The weird thing, I think, is that here in Germany, the Chancellor doesn't get the shot first. They want to be just like regular people, right? But in the U.S., the president gets it right away. You don't want to lose your president.
Right, but Matt, I mean, as a UK citizen, you kind of find it crazy that people have any, can say, well, I want this shot and not shot, because actually, if you look at all shots, it significantly decreases your chances of dying or ending up in hospital. So I would just take anything. And Kaylee, this, of course, I know we talk about inflation, but the reopening and vaccines also always is essential in market movement.
Oh, absolutely, Francine. And that is what has fueled that furious rotation in large part toward the reopening trade, more cyclically sensitive areas of the market. That, of course, took a massive pause yesterday with the 4% rally in the NASDAQ 100. But it looks like that rotation may pick up some steam again today. Looking at the futures market, it is Russell 2000 futures that are outperforming, up around 0.3% right now. We're only up about 0.1% on the NASDAQ 100. So we will see if there is any kind of follow-through buying from yesterday's rally, or if it was just the market bouncing off some technically very oversold levels. Of course, keep a close eye on the bond market, especially come 1 p.m. Eastern time, when $38 billion worth of 10-year treasuries will get auctioned off, right now sitting at 1.55% or so. And crude has been fluctuating between gains and losses right now. We're up about 0.1% on WTI to $64 a barrel. As for some stocks to watch, come the U.S. Open in about 4 hours' time, your biggest outperformers in the pre-market, one of them is GameStop. Already in the last 5 days, the stock is up more than 100%. It is up another 17% in pre-market trading. Retail investors, Reddit investors, still very active. We also have Skills up about 7% after it refuted a short-selling research report from Wolfpack Research. It also reports fourth quarter results after the bell today. And finally, Virgin Galactic up 6.3%. No real news there, Matt, but of course, we always have to keep an eye on Richard Branson Space Company.
Yeah, absolutely. I always have been anyway. I love following all the space news. I want to just point out something. We had a little conversation about Trading Places and Deutsche Bank. So Hillary put a chart together for me. This is the performance in white and blue of the banks who paid their traders the most, and in yellow, the performance of the bank that pays their call center employees the most. I jest. It's actually not. In white and blue, you see Goldman Sachs and Morgan Stanley's performance. In yellow, you see Wells Fargo's performance in terms of revenue growth. And I actually stole this idea for this chart from our next guest, Francine.
Yeah, I love that. A pullback in Treasury yields, calling, of course, the value rotation into question amid improving recovery outlooks and a pause in the big tech exodus. Now, JP Morgan EMEA Chief Executive Vis Raghavan weighs in.
You will see an element of rotation continue because the reemergence of a yield curve means, banks, financial institutions, etc., are going to really benefit from a more NII and the like. But what is also very much the theme here is the incredible stimulus we have seen. If you look at the last count, I mean, we are talking about $10 to $12 trillion of quantitative easing that's been injected into the system. We have fiscal stimulus. So all of this money is going to underpin and sustain asset prices. So we are still really bullish on equities. We do see a recovery theme continue. We see GDP growth continue. I think there is pent-up demand. I mean, if you take the consumer who's been bottled up in lockdowns and the like for the best part of a year now, I think there's really a desire to go out and go consume, go spend, start living again. So all of this points to a kind of a healthy economic recovery. So we are going to see sustained interest in equities. You're going to see an element of rotation happen.
That was JP Morgan's Viz Raghavan, EMEA Chief Executive. We also, so that was a conversation on the markets. We also had a conversation about working from home and, of course, paying bankers and how you retain talent. Now, joining us to talk about all of these things, Octavio Morenzi, Optimus founder and Chief Executive Officer. Thank you, Octavio, for joining us. Matt Cayley and I were having a spirited conversation about how you have to pay traders more if you want to make money for a bank. But overall, how do you retain talent post-pandemic? Is it, being more flexible and working from home? Do people want that? Do they care about that? Or is it just a bonus pool?
Well, I think for investment bankers, it's always the bonus pool that seems to be the most important thing to them. But I think that's a really multifaceted question. And I think it also depends on largely sort of the age of the employees and how much experience they have. And I know a lot of the younger people very much want to be back in the office and be in that kind of environment, and that fulfills an important social function for them. A lot of the older employees, the older traders, investment bankers are delighted to be working from home and have moved out of London or out of New York and are busily doing all their deals from the countryside somewhere. So that very much depends. But I think the flexibility is the important thing, as you pointed out. But even if you go back into the office, these younger employees, they sometimes find now they're going to really cavernous, empty buildings where there's no one else around, and it's just as depressing as staying at home for them.
So can European banks compete with attracting talent, against the U.S. Wall Street banks?
I mean, it's difficult. I mean, you were talking about the call center employees. I think certainly they can. So that's a relatively straightforward thing to be able to do. On the investment banking side and the trading side, I mean, the U.S. banks have done so very, very well over the course of the past year or so, and that's a very difficult thing to compete with. Now, individual lines of business in individual asset classes, yes, you can certainly, but you have to pay them top dollar to get them. So good bond traders, good OTC derivative traders, good FX traders, things like that are really at a very high premium right now. So attracting them is simply a question of paying the salaries they're demanding and looking at the bonuses that they're getting. But I think certainly European banks can do it. But I will say the large US investment banks have just had a spectacular run over the course of the past year or so. So that's pretty hard to compete with.
Well, I wonder if that's going to change. Octavio, I took this chart I took the idea from your note. We all know that obviously trading revenue has been on fire over the last year and lending revenue has not. That's why, Wells Fargo has underperformed Goldman Sachs and Morgan Stanley. That's also why Deutsche Bank's strategy has kind of shifted almost outside of savings control. But I wonder if that continues. As we see the yield curve start to really steepen up, are the Wells Fargos or the Deutsche Bank lending arms going to be making more money than the traders?
Well, let me say, first of all, I was really impressed that you got that chart together in about 3 minutes, but it seems that you had a bit of a head start in getting it together. But you have sort of picked the worst class the worst student in the class, which is Wells Fargo. So that's a bank that has some other problems as well. But I think it does illustrate the point that the investment banking side has done fantastically well. The lending side, the payment side, credit cards, not so hot. And that's the case around the world, but particularly in the US. So if you compare a Wells Fargo to some of the other banks that have large investment banking arms, yes, you're going to see a huge difference. But Wells Fargo has a bunch of other problems there as well. Now, will that change now in the coming year? I mean, so far this year, it's still a story about investment banking and trading. So we haven't seen a big recovery yet in the retail and commercial banking side. What we have seen is now interest rates on the longer end creeping up in the US, not in Europe, but in the US. So we're seeing a steepening of the yield curve, and that should help the net interest margin at these banks. There is a problem that lending activity is a bit off, and the banks have basically sort of run out of people to lend to. Deposits have shot up, so deposits are higher than ever before. People are just plowing, saving lots of money in this environment. So they're awash with deposits, awash with cash, and no one left to lend to. So I wouldn't really expect the lending activity to go up that much, but the net interest margin should go up. Now, for something like Wells Fargo, it's a bit problematic, interest rates creeping up, because they're dependent on mortgages and mortgage refinancings a lot.
Right. Well, I want to get to that as well. I resent your assertion that I prepare my work before the show, Octavio. But of course, you have to prepare far before, as not only in terms of how you look at banks, but also in your role as Chief Investment Officer. You've got to have a view on what you think rates are going to do. What is it right now? I mean, have we hit a top at 1.5%, 1.6%, or do you see the 10-year going higher? Does the yield curve continue to steepen? Do we get yield curve control? What do you expect?
I expect the Fed is watching this very, very closely, and they've sort of allowed the longer-term rates to creep up while keeping the shorter rates down. So they've done this quite deliberately, I think, in terms of making that happen. There's nothing to stop the Fed from intervening in the 10-year market or the 30-year bond market and starting to buy those bonds up and flatten the yield curve out. But I think for the time being, the Fed is quite happy to see longer-term interest rates going up and keeping shorter ones down. And I think it's specifically to help the banking industry on the retail banking and sort of the bread and butter commercial banking side of things. I think that's quite deliberate. Now, that's, of course, really bad for tech stocks. Tech stocks have sort of longer-term horizons where you're discounting cash flows way into the future. Those things then suffer. So that's a bit of a trade-off the Fed has made there, but I think they'll monitor that very closely. At some stage in the next year or so, they are going to be tempted to start to raise interest rates again on the short term, and I see trouble brewing there because a lot of investors are going to run for the exits as soon as that happens. So I think once the Fed starts to even think about increasing interest rates again, a lot of people are going to say, okay, let's jump for the doors right now and get out of this before the whole thing sinks and crashes.
Octavio, speaking of the Fed, they, of course, granted relief on capital requirements to banks last March. That's going to expire at the end of this month. If that isn't extended, what happens?
I don't think very much in terms of capital requirements because, as I said, the lending amount hasn't really gone up that much and has been flat or decreasing even at many banks, while the deposit bases have gone up enormously. So they've got quite a capital cushion. So the capital requirements, I don't think, are going to be such an issue. It's not going to be a problem for them at all. They're basically over-reserved at this stage, and so reducing the reserve requirements doesn't really make any difference. They're very far away from reaching those limits at the moment, so that should be okay. Now, there's a whole bunch of other capital requirements that they can play with a bit, but I think those effects will be kind of marginal anyway.
Octavio, our most read story on the Bloomberg terminal is that the death of the 60-40 portfolio makes it very hard for funds to return money because of the way bonds have been behaving. Is it something that you worry about?
I mean, if you look at the whole money market industry, that's of course in trouble as a result of ultra low interest rates. So it's very hard for them to actually make any money in this environment. So, yeah, I'm concerned by that. I mean, these interest rates look very artificially low. There's no reason for them to be that low. That being said, if you compare U.S. interest rates to European interest rates, they're still actually quite high. So if you go out to the 10-year or 30-year range, I mean, in Europe, we've got negative interest rates on many 30-year government bonds and certainly on the 10 years for most of them in developed Western Europe. So there's still some space to push interest rates down lower. But if you look at sort of the money market funds and things of that sort, they suffer in this environment. They can't cover their costs, really, with such low interest rates.
Octavio, thank you. Octavio Morenzi there, Opima's Chief Executive Officer. Now, coming up next, vaccine passports, how the latest push could affect the future of travel. We'll discuss that in length. This is Bloomberg.
generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
In principle, we could further increase our manufacturing capacity. So I don't see a limitation why we should not be able to produce even 3 billion doses in 2022. And it really depends on the demand. It depends on factors, for example, whether additional boost vaccinations are required.
That was the CEO of BioNTech, Dr. Ugur Sahin, speaking to me from Mannheim last night. Now, there's a growing push to make vaccine passports a reality. The European Union will propose a certificate that could ease travel for those who have been vaccinated. And now U.S. airlines are urging the Biden administration to develop virus passports as the country's infections spread at the slowest pace since the pandemic began. So more people would be able to do stuff. To tell us more about what this could mean for the global situation, Alberto Nardelli of Bloomberg News joins us. And Alberto, first of all, I wonder who's come the farthest and how soon are we going to see these passports get into the hands of the vaccinated?
Well, I think we're still some way away. So basically, what's happening is that the European Union is developing a framework that it hopes will allow the certificates that each individual European country develops to be able to interoperate with each other. So, for example, if you get vaccinated in France and you get issued a certificate and then you go to Greece on holiday, the Greek authorities can read that certificate. So this is really a first step in that process, and that regulation is expected to be published later this month on the 17th. And then it's up to all the individual countries to develop their own certificates. And obviously all of this is in parallel to countries actually vaccinating people. So it's still a few weeks, if not months away until we actually see the certificates themselves.
Alberto, you break news more than anyone I know, actually, in my vicinity. So congratulations on really always being upfront on the news. When you look at the vaccinations, the passporting, I mean, it seems like every day it's a UK versus EU spat. They're fighting and fighting and fighting. How will this end? Will even the passports be a point of contention?
I think that's a very good question. I think there is a huge difference between the level of vaccination within the European Union is about 6-7% now. The UK is over 30%, and lots of people, rightly or wrongly, perceive that through the prism of Brexit, which creates tensions on the two sides. The spat yesterday evening between the President of the European Council and the British Foreign Minister, the latest example of that. I think on the certificates, the system that the European Union is developing now is very much focused on member states. So there could be some point of tension there if the two sides don't communicate. However, individual member states like Greece and Cyprus have already said that they will develop systems bilaterally with the United Kingdom if something that works across the whole bloc isn't produced. So it's likely that countries will come up with their own solutions.
Alberto, thank you so much. Alberto Nardelli there of Bloomberg News. I know, Matt, I try not to have fights on Twitter. I try really hard, but sometimes you just have to get stuck in. And the only one I've had in 2021 was actually whether it was fair to issue these passports before everyone got vaccinated. And I'm all for it. If you can go on holiday because you're at risk and you've got vaccinated, I have zero problem with that.
Yeah, absolutely. I mean, the pushback I've heard from airline executives is that it's not fair to people who are young and healthy, since the old people get vaccinated first. But that's like saying it's not fair to people who are super rich. I mean, you're young and healthy. Take that and stay home and be happy until you get your vaccination.
Coming up next, we agree, Matt, finally. Coming up next, meme stocks are going mainstream. Some of our exclusive interview with the Robinhood chief executive, Vlad Tenev. This is Bloomberg.
Everybody says we should practice before we go to Mars, but some people say we need to practice on the moon. Well, you could practice on the moon, but you can do it at 1/10,000th the cost in the desert in Utah.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
I think you can look at our vision broadly and say that right now about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do. And moreover, I think there's an opportunity to expand that beyond the U.S. There's no reason why the greatest financial system the world has ever seen should be only available to Americans. We can make that available globally, and not just to high net worth individuals and the wealthiest 1% globally, but to the mass market. And so I think that's a huge opportunity.
Robinhood Chief Executive there, Vlad Tenev. You can catch that full interview with our Emily Chang at 1 p.m. in New York. Now, Tom Keene, co-anchor of Bloomberg Surveillance, also joins us. Tom, is a 12-year-old, is she sticking by her inflation call, looking at stimulus, and still trading on Robinhood?
Well, yeah, we're day trading off the couch. Vet Bill has lost money 3 days in a row on GameStop and is really having trouble with it. Francine, let's go to the chart right now. Really quite important. This is for tomorrow, a little economics now. But on stimulus, where exactly are we? This is an original chart. This is what the Bloomberg terminal does so well. This is claims, but adjusted for the rising American population over decades and decades. The miracle of lower claims compared to population, the huge pandemic spike, and then down we go. Francine, that's a good indication of how far we have to go to get back to normal.
Yeah, and I love actually, the OECD yesterday was in plain language was basically saying thanks to the stimulus in the U.S., the world will really get a bump up in GDP. You're also looking at, I guess, world affairs with General Stavridis.
Well, we're looking with General Stavridis. We have the Admiral on today, a new book out on China and the possibilities of war down the road. It's an important book. Before that, The Joy of Craig Moffett and Michael Nathanson. We do this once a year with these gentlemen. They are absolutely definitive in media. To have Moffett Nathanson together is a global Wall Street event.
Tom, thanks so much. Tom Keene there, co-anchor of Bloomberg Surveillance. I wanted to ask Tom, Matt, whether he was, ready to get his passport once he gets fully vaccinated and leave. But, a lot of people are starting to have those conversations.
Well, he'll be able to go to Bergdorf Goodman and pick up a new handbag for his special lady friend. I want to take a look. Speaking of Tom, if you're an early surveillance fan, back in the day, John Tucker used to join Tom and read out his 401k, which I loved during the financial crisis. If he had invested 1% in Bitcoin, I have a chart showing how much he would have made. This is 60-40 in blue, just 1% in Bitcoin, and then like 59-39 in stocks and bonds. And look at how well Tucker would have done.
Yeah, I love that. I just invest in technology. Kaylee also in technology and watching US CPI a little bit later. Now, coming up, we'll have plenty more, of course, on the markets. Bruce Kassman from JP Morgan also joins Tom and John.
Women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
1.9 trillion US stimulus. We think that will lift and global GDP growth.
We're about to have a $2 trillion stimulus, so the propensity of consumers to spend is very high.
Inflation is going to be a burst coming in the next 12 months, and then it's going to calm back down again.
This is not a Fed that's going to hike upon a falling unemployment rate. And it's not a Fed that's going to hike when they start to sniff out inflation. They are going to wait.
Fed policy inevitably at some point is going to shift.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
1.9 trillion from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Tom Keene, a monster plan about to be passed in the House down in Washington, D.C.
And radically different, John, than any we have seen in modern history. The deployment here to the lower quartiles of American economic pie is tangible. This will be felt completely differently in the next 6 to 12 months.
The trillion-dollar question for this market is not about the data and what it'll look like. That data is going to be booming in several months' time, Tom. It's about how we respond to it.
Right.
That's not an economics question. That's a psychological one for this market. What do we look like at the turn of the middle of this year when that data's booming, and how do market participants respond to that data?
Well, I got up from the surveillance nap yesterday, John, and you had on my pad, you texted me the Morgan Stanley upgrade there. We're going to talk to Dr. Kasman of JP.
Okay, guys, we sold Bitcoin, as you can see. We sold at 54,739. It gives us 0.5% of total investment. I'll show you. So well done, all of you who decided to follow this trade or who use our strategy. It took us how long? A couple of hours until we'll made a profit, quite decent profit. Good. I'll speak to you later. We still have many other positions outside the screen as well, so we're working 24/7. Well done with Bitcoin. In our case, we have £500 in profit. In your case, it's all depends on the how much you invested. Okay? Good trade. Well done. If you want to get strategy, you can find our strategy from our website, company.co.uk. This week, as far as I know, webinar is sold out, so we don't have any spaces available. But next week, probably you will have, if you want to register for webinar, you're welcome. Tomorrow, after tomorrow, the company will publish what date and what time it will be running, and you can register for webinar. Otherwise, get the strategy or follow our trades. Try to make some little profit for yourself. Okay? I'll speak to you later. Stay safe.
Their final vote on this $1.9 trillion stimulus plan. All eyes on what's next. Do the Democrats have enough political clout, enough political unity to actually get something else done? And how much are they going to look towards stimulating the economy through infrastructure spending and some of the progressive elements? We're going to be speaking with one of the advisors, Jared Bernstein, to President Biden later in this hour at 1 p.m. To your point about bond auctions, John, we're going to be getting, U.S. Is going to be selling $38 billion of 10-year notes. This follows the $58 billion of sales of 3-year notes yesterday that went really well. People were worried that we were going to get a repeat of the 7-year auction. We did not. We had the highest bid-to-cover ratio, a sign of how much demand there was. Going back to 2018, and we saw the independent buyers, not necessarily dealers, come in force, just showing there is a bid to buy bonds with yields as high as they are. That part of the reason why, perhaps, there was a sense of stability under the market yesterday, John.
The test coming at the long end of the curve a little bit later today. Lisa, thank you. Yields are higher this morning on 10s by 4 basis points, on 30s by almost 5 to 228 on a 30-year, on a 10-year, about 156. The headline, Tom Keene, from Morgan Stanley yesterday, here's the line for you from Ellen Zentner and the team. Yep. GDP is now on track to reach its pre-COVID level by the end of the current quarter.
Exactly. You nailed it, John. It's a timeline. It's the x-axis right now, and everybody's dealing pro and con. The bets are made in the market, not so much with the y-axis and what's going on, but the timing of all this, John. It's a huge mystery.
Let's bring in Bruce Kasman, Tom, JP Morgan chief economist and head of global economic research. Bruce, great to catch up with you, sir. Typically, we'd start with the analysis, then we'd get to the forecast. Can we just start with the call? What is the call from you and the team for this year?
So we've got the U.S. economy growing at a 6.5% pace, with the middle part of the year, huge, almost 9% growth for the next 2 quarters. I would just want to emphasize the global dimension of what's happening here. The U.S. is lifting largely off fiscal stimulus, but we don't want to ignore the lifting you get in Western Europe coming as the virus starts to fade, as the vaccines come on. That's as big a lift in our forecast. So we have both the U.S. and Western Europe booming over the next couple of quarters, and our mobility indices are suggesting that that lift in Europe started in February.
That's right where I want to go, Dr. Kasman, and I'll go to Columbia University. Let's dovetail your world-leading market economics with the academics of Xavier Saleh Martin. If I look at growth economics right now, how does a stimulus actually work in the emerging markets of Professor Saleh Martin or in the JP Morgan world? How does it actually diffuse worldwide?
Well, that's an interesting question, and I think what we're going to see is just the dominant effect of spending in the U.S. and Western Europe, which is going to be sucking in imports from the rest of the world. That is going to lift everybody, but there are offsets in terms of higher interest rates, in terms of central banks in emerging markets, not the Fed, of course, beginning to move towards tighter policy. The net effect of this is a very clear positive. The other reaction, which I think is important, is China. They've had a very successful recovery. They're going to sit on the demand they get from the rest of the world and tighten policy here. So Chinese demand is going to slow, being somewhat of an offset against an otherwise booming global growth picture.
Bruce, how much is just a recovery from some of the lost productivity, the lost growth that we saw in 2020? And how much are we entering a new cycle of potential inflation?
Well, the way we've been thinking about this is to recognize that there is a huge bounce that's coming as we normalize, as we get bottleneck pressures, as we're seeing commodity prices. So the inflation pickup here looks to us like it's going to bring U.S. and global inflation possibly to the highest pace we've seen in a decade. I want to fade that. I think there's a lot of temporary forces that are going to start to dissipate as we get later in the year. However, I think behind the scenes, what we're seeing is committed policies. We're seeing with this stimulus a very healthy balance sheet on the part of the household sector. We're seeing the interaction of Fed policy and fiscal policy. So I want to buy the reflationary trend, and I want to fade the bounce that we're going to see in the next few months, which is going to way overstate the degree to which this is changing.
Bruce, do you think that will be the dominant market narrative later this year when we get that better data? And I keep going back to this story because it's so important. The data will get better. We can all agree on that, whether you're bearish or bullish. What the bears believe is that the inflation starts to run away and that the market starts to tighten up and then bring forward Fed hikes as well. Do you think everyone else gets your view of the world, or enough people gets that view?
I think there's no doubt as we go through the next number of months and we see inflation spike higher, as we see these huge growth numbers, the debate is going to be, are we going to overshoot on inflation? Is the Fed going to have to move earlier? I think the Fed is going to be an anchor here, basically telling us that at least until the end of 22, they're on hold here. They're not going to change their thinking anytime soon. And I think if we're right, what we're going to see is the inflation numbers settle down. But I think in an underlying sense, show signs that it's moving higher here. So I think the bottom line here is that we're going to definitely buy this as a very different event than what we saw after the global financial crisis. But we got to get through this scare, and I don't doubt that there's going to be a lot of talk about whether inflation's getting out of control here.
Bruce, I mentioned the x-axis, the timeline, moments ago. Michael Feroli has been a great leader on potential GDP. What's the Kasman timeline to get back to 2% potential GDP? Are we grossly off? Is it much farther out than we think?
I think that's a really hard one, Tom, and we're kind of struggling with trying to figure out the lasting implications of what's happening here. There are clearly some negatives here in terms of having created dislocations, scarring in the labor market that are going to continue here for some time. But at the same time, we're getting a boost to growth that's not only lifting growth back to its previous level, it's actually raising it above the path we were on. And there's some real possibilities here that dynamic, if it's sustained, creates positive factors. Our potential growth estimates for the U.S. are 1.5. We haven't changed that yet. But I have to say I'm somewhat agnostic about what the next couple of years are going to deliver on that front.
Bruce, always good to see you and great to catch up. Bruce Kasman there, JP Morgan chief economist and head of global economic research. We have to reset because later this morning we'll be catching up with Jared Bernstein of the Council of Economic Advisors. And Tom, he'll do his best to sell this plan. But one thing that's clear to me is that the nature of this shock is radically different to the nature of the last shock. So my question at the moment for policymakers, why are the lessons of the previous cycle pertinent to this one if the shocks and the nature of these shocks are so different? And was the shallow recovery that we saw 10 years ago, more than a decade ago, Tom, a consequence of a failure of policy or just a consequence of the nature of a shock off the back of massive deleveraging? This recovery is going to happen really quickly.
Well, speaking of Columbia and Bruce Kasman, I'd go back to Jeffrey Sachs and the partition of America as a general statement into technology winners and technology losers. None of these stimuli, John, do anything to this arch issue of how to drag people into a modern technology world. So the partition, John, remains.
Well, and to that point, John, you raise a question here about what is the lesson that people learn? Why do people think that the lesson that we learned is applicable to this very different crisis? The lesson has been learned over decades with inflation coming down. And exactly to Tom's point, this idea of how do you bring people into the labor force that have been quickly exiting? It's not just the last crisis. And the question is, you know, are people understating the potential for inflation, or are they overstating it? Which is worse? I don't even know. I mean, are the bears more worried about disinflation or too much inflation?
Can you imagine what that tug of war looks like later this summer when we start to get that data? I think it's going to be absolutely fascinating. And I think it is a psychological question. It's not an economics one. The data will get better. Inflation will be moving to the upside. The base effects will kick in. Tom, how does this market respond? How do perceptions of policy shifts start to adapt to that too? And I think that's going to be the big story for the middle of this year.
I think those are the blunt instruments, but I'm going to go to one Bloomberg headline of 20 minutes ago, where Adidas, John, I know you say Adidas, Adidas shows bang up digital growth forward. We're going to see a lot of those headlines.
It's not that I say Adidas. It's the founder of the company called it Adidas.
Yeah, but America says Adidas.
Coming up, a conversation with Craig Moffett and Michael Nathanson, the founding partners of Moffett Nathanson.
knows it's not
they
Disney.
Will be covering the Walt Disney Company.
Are
we done?
Moffett saying
just
okay, I'm pleased to see you're on form this morning, Tom.
Yes,
From New York City this morning, good morning to you
Disney.
all. This is Bloomberg.
Going to Disney.
With the First Word News, I'm Rishika Gupta. It's one of the largest economic relief packages in U.S. history. The House is set to give final approval to President Biden's $1.9 trillion package. It's likely to become law without getting a single Republican vote in the House or Senate. Millions of American families will get one-time payments of $1,400. There will also be more unemployment benefits and aid to state and local governments. The Pentagon will keep National Guard troops deployed at the U.S. Capitol through at least May 23rd. The deployment began after the January 6th riot and was set to end on Friday. Last week, the chief of the Capitol Police asked for an extension. In China, producer prices rose last month at the fastest pace in more than 2 years. That adds to the risk of global inflation. The Chinese producer price index was up 1.7% from a year earlier. That raises the prospect that China could start exporting inflation as factories raise prices for products sold abroad. And hackers say they gained access to 150,000 surveillance cameras inside hospitals, companies, police departments, and schools. Amongst those whose footage was exposed, car maker Tesla and software provider Cloudflare. The video was captured from Silicon Valley startup Verkada, which collects security camera data. Verkada says it's taking steps to prevent unauthorized access. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.